Boom! There we go. We are live. Welcome back, everybody, to another episode of Benzinga Live. It's Hump Day. It's our favorite day here at the Benzinga office. I don't know where Spencer is. I guess he took the day off without telling me, but hey, look, it's okay. He's been working hard, so Spence deserves a day off. Let me know in the chat what you guys are watching today. Been a pretty, I don't know, it started off looking like we were going to have a good day in the market, that we were going to bounce back. Let's just pull up the SPY real quick. You can see here, right, this intraday sell-off that we've had the past, really since the open. So nothing really great's been happening since the open. SPY now down 0.5%. Let's go ahead and get the show started.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have
breaking news. And so it's really more of the same, right? What moving the markets, it's just more fears about what's going on in Ukraine and Russia. It seems like we're in this trend right now where on any pop, right, you can sell that pop and stocks are moving back down. You can pull up any of your big names, even Apple now down almost a full percent. Microsoft was in the green when we opened this morning, now in the red. So all major stocks have had this little intraday sell-off. Let's check in on our good friend Tesla, see how Tesla's doing. Wow. So here's what I think is interesting about... Oh, no one told me I wasn't sharing my screen. This Tesla chart, right? We were holding this level right at 800, and now we've fallen through there. And if we can't regain that 800 level, I think Tesla, we might fall all the way down to around 750 in the interim. But look, I mean, look at this trend from Tesla, right? Ever since we came up here at 1250, we traded back down below 1,000, got back up to $1,200, and then now have come all the way back down, fallen through the support levels, are not really sitting anywhere where we have any support. So, look, if it were me, I'd question holding my Tesla right now. Not that I think it's got, Tesla's a bad company or the stock's going to go to zero or whatever, but if I could get back in at, say, 700 flat or 600, I'd rather do that than just holding it, watching it in this downtrend. And we haven't really had that much news on Tesla come out recently. There's been some concerns about Tesla's market share in China, that China, Tesla's been a big seller in China. Hey, Spencer.
Yo, what is up? Look, I was there in the other studio, and now I'm here. That's amazing. How you doing? Talking about Tesla?
I was talking about Tesla because this chart just doesn't look great. And you can put it up on your chart if you want, because I know you like yours more than mine. But, I mean, so we had this double top up here at 1,200 and have just come back down. But, I mean, I'm not saying, so right here we do have, it looks like we were trading at this level for a little bit, where we're at right now at 780. We were right here at around, 778 down here. So this will be an important level today if we get all the way back down. We're at 788 right now. If we get to 780, see if it holds that. If it falls through there, I think we're going back down to 700 flat.
Okay. Did you hear about the Lucid Motors recall?
Yeah. Let's pull up Lucid's chart. It was 200 cars they recalled, correct?
Something like that. And look, recalls aren't normally a big deal as it pertains to the stock, because when you're making tens of thousands of cars a year or more, then a recall or a recall of a few thousand isn't a big deal. But when you're making like a couple hundred or 1,000 cars and you're recalling 200 of them, not great, Bob.
Yeah, I mean, and Tesla's had some recent recalls as well.
But again, Tesla makes tens of thousands of cars.
Yeah, but the recalls accounted for actually a decent percentage of like the total amount of cars they've sold in the U.S.
Oh, really?
Yeah. I can't remember that exact number off my head, but I want to say it was like a good chunk of cars that Tesla's ever sold in the U.S. But the Tesla recalls were like with like the trunk and the headlights or something. They weren't real like technical issues with the car.
Yeah. Anyway, I don't know. Tesla has always. I'll bring up my chart. Tesla has always been a stock that I am loath to try to categorize or put in a box. And I know it probably trades more quote unquote normally now that it's in the S&P 500 and you've got that effect going on. So maybe this is a different, maybe it's just a different future for Tesla stock. And maybe we can sort of put that crazy volatility of the past behind us. But I've never been one to think, oh, for example, like the market's going down, therefore Tesla will go down, and the market's going up, therefore Tesla will go up. It moves to the beat of its own drum, though I guess I'm not so sure about that now that it's in the S&P. But
I mean, I still think in relation, it's relatively still volatile compared to other stocks, but I hear you. What I think is interesting looking at this long-term chart, and you've got the daily pulled up going all the way back about 5 years.
Yeah.
But look at that.
I don't know why I would decide to go this far back, but I did.
Look at that trend established
This isn't even helpful.
from the COVID lows.
This guy?
Right? You can just draw a line, and you can see where it got overextended off that trend line and came back to it.
My issue with trend lines is like you can just draw them. You can just draw them from the low to the low. You can always make it so it's not breaking below, can't you?
Well,
that's why I don't like trend lines. Maybe it's just me.
Okay.
I don't know.
My point was that the fact that if you draw this simple trend line and you can see kind of where it got overextended, came back down to that trend line, traded on that trend line, got overextended, came back to it. Now we're below it. And you know, so I wonder if that'd be reflected in some of the moving averages. But either way, this just looks bearish to me, man.
I mean, yes. Yeah. The whole market kind of looks bearish to me right now, to be honest with you.
Also, I do want to talk about Asana today.
Good. I'm glad. I was not going to bring it up, but now that you did.
Yeah.
No. Let's get there in a second. All right. Let's talk about Coinbase because that's the title of today's show. So.
All right. So I'll go
Fill me in, please.
All right, fill you in, Spencer. So. Not this previous Sunday, but the Sunday before. It was Super Bowl Sunday.
Oh, yeah, I heard about that.
Yeah. Big deal for the football teams. Maybe an even bigger deal for the advertisers. No, I shouldn't say that. Well, for the advertiser, for the Super Bowl is advertisers' Super Bowl.
It's like the Super Bowl of advertising.
For advertisers,
yeah,
it's the Super Bowl.
That's crazy.
So Coinbase had one of the most, I don't know if you would say popular, controversial, talked about. Let's say one of the most talked about.
Oh, yeah, I loved it.
Which was a QR code that was changing colors, just bouncing around the screen.
Yep. I did it.
In a very 1990s DVD logo.
For sure.
Esque type way.
For sure.
And the Coinbase CEO, Brian Armstrong, took to Twitter. And let me pull up his Twitter thread real quick.
Did he just say how amazing the commercial was? Because it was a pretty amazing commercial. I'm not going to lie to y'all. I loved it.
Yeah, I mean, so let us know in the chat. Did you guys do the QR code?
Heck yeah.
On the commercial? I know Spencer did. I did not because I was like boycotting it or anything, just because my phone was charging and it wasn't enough for me to get off my couch to go grab my phone to do it.
That's always a fair reason not to do anything in this life.
All right, I'm going to go ahead and share this Twitter thread.
Yeah.
We can do a little group reading here.
Group reading. You want to take turns reading out loud?
Were you like a kid in elementary school that hated getting called on to read, or?
No. I no. For you know what's weird is like how your identity changes as a kid. Like for a while, when I was like in like elementary school, part of my identity was I loved to read, and I was like whatever being a good reader means at that age. But I thought I was a good reader, so therefore it was part of my identity. No, so I liked being called on to read out loud. I don't like it now, ironically.
I liked it as well as a kid. I was kind of the same way. I read a lot as like a young
Wait,
kid.
Chris says he scanned it the second it was on screen. I barely made it because my phone was so slow and the thing kept moving I barely made it to. I think I got there with like 1 second left. But anyway.
Okay, so Brian Armstrong, CEO of Coinbase. Some folks asked about details of our Super Bowl ad. Here's how it came to be. We bought the space. He's talking about the space, not the commercial, not knowing what we would do. Initially, an outside agency pitched us a bunch of standard Super Bowl ad ideas. Didn't like any of them. We went back, brainstormed, came up with a bunch of wild ideas. We were running out of time. One of the original ideas we had included putting a QR code at the end. This was partially inspired by Reddit's Super Bowl commercial at previous Super Bowl. And then so he's basically saying they got pitched ideas by an ad agency, didn't like it, went back to the drawing board, was running out of time, and just kind of decided on this internally on a last-ditch effort, and it worked out.
Okay.
Kristen Cavallo, who's the CEO of the Martin Ad Agency, came in and said it was actually inspired by our presentations. Our agency showed your team on August 18th, pages 19 through 24.
Damn, she brought the receipts.
She brought receipts. She brought pages. I was expecting her in follow-up to tweets to publish the actual receipts. And if you know, Spencer, you're familiar with Ratio?
I'm familiar with the Ratio. Yes.
Okay, so you're familiar with the Ratio.
But explain it to those you don't know.
So Ratio, it's a
verb.
It's a verb. It's a noun. It's anything you want it to be. Is when someone say I tweet something saying I think or I like Tesla stock and it has 10 likes.
Yeah.
And then Spencer replies to it and says, well, I love Tesla stock and it has 100 likes. He ratioed me. So it's when the original post has less likes than a reply or a quote tweet. So look at this. I mean, Kristen Cavallo's has 12,000 likes almost, and Brian's, has 300. Well, the original one had 3,000. So he got 4-to-1, or he got 4-to-1 ratioed by Kristen here. And then Kate,
she brought the heat.
And then Kate Rouch, who's with Coinbase, I believe she's on the marketing team, came in and tried to basically like save face.
Wait a minute, that's just
look who we have here.
Tiny Pie.
Tiny Pie's everywhere.
Tiny Pie.
Tiny Pie is everywhere.
What are you doing over there, man?
So Kate basically says all this stuff, and look how bad Kate got ratioed. And she goes, breaking up is hard to do. I wish the team at Martin Agency all the best. So she's trying to save face for Coinbase. This tweet has 24 likes and 120 replies.
All right, so there are two kinds of ratios.
Right, the reply ratio.
So there's the reply ratio, and then there's the tweet engagement ratio, which I believe, I think that the idea of the tweet engagement ratio was an idea created by a former Deadspin writer. I remember reading about that when I was in college. He had this idea of whoa, if you have a tweet that gets way more comments than it does retweets or likes, that's probably not a good sign. And so that's what happened here.
Yeah,
right?
and you'll see it a lot with
comments are seen as a negative engagement. Well, not negative. Well, yes, potentially negative engagement.
Yeah, 100%. If you have a tweet out there that has a lot more replies than likes, it's
not a good sign for you.
Probably not a great sign.
Not a good sign for your.
Shoot, I just had someone in my head who's a good example of someone who gets reply. Oh, like Darren Ravel.
Yeah, he gets ratioed.
And I don't get it because if you look at Darren Ravel's Twitter, which while we're talking about, Darren Ravel is a sports business reporter.
I met him once.
Really?
Yeah.
Is he a good guy?
Nice guy. I met him for 10 minutes. I was 19 years old.
And here's what I don't get about Darren Ravel's Twitter.
Yep.
He has 2 million followers. Yep. And then let's go to his tweets. He'll get 65 likes on a tweet.
Yep. Man, Tiny Pie is really fired up about this, apparently.
About the ratio thing?
No, about the Coinbase thing.
Oh, this is cool. Look, you can bet on the Golden Tee Golf World Championship.
I don't even know what that is.
You don't know what Golden Tee is?
No.
Golden Tee is the bar at the game where or the game at the
Oh, that thing?
Yeah.
Oh, there's a world championship for that?
I guess so.
Oh, that's kind of cool. Okay, so Aaron and I both have some owning up to do because Aaron has loved Asana and I've loved SoFi, and they're both getting smacked in the face today. So we can talk about that.
Well,
yeah.
Well, here's all right. Let's pull up Asana's chart real quick.
And do we know why Asana is down? I do. Do you know why Asana is down?
I asked why we didn't. I was looking for a whim on
You
it.
you asked the news desk?
Yeah.
Oh, come on, man.
Should have asked you. Can you fill me in here?
Wait, I can't find my pro. Oh,
Is
there
it
it
because
is.
Slack was down yesterday?
No, that would be funny, but no. All right, here's my pro. No, Asana's down because of Monday.com. Monday.com, MNDY had earnings this morning. Not this morning, last night? I think it was last night. Let's zoom in on the Monday chart here. And let's go to news on this. Oh, no, it was this morning. Excuse me. And the bottom line here, you kind of have to take these numbers, the Q4 numbers, compared to the estimate with a grain of salt. That's not as relevant as and same with the guidance too, not as relevant as like how this compares to prior growth rates. And Monday.com is experiencing the same thing that every other pandemic play is experiencing. Their growth is coming back down to earth. It's difficult here. You would have had to look at you would have had to have looked at the balance sheet because Monday's only been public for less than a year. So we don't have any year-over-year comps to compare them to. But if you just look at the growth rates of the EPS, not the EPS. Oh wait, is that real? Is that right? The EPS hasn't changed in 3 quarters. That's weird. But if you look at the growth rate of the revenue, right? The growth rate is declining. So that's why Monday is down today. So Monday is down because their growth rate's declining. Monday is in the exact same business as Asana. They do the same thing.
All right, I have a couple things.
Okay, go for it.
A few things.
Yeah.
So.
Yeah. I'll compare.
I was actually very close to selling. So I did sell.
So Monday is down 40%. Asana's only. Oh wait, this is. Hold on, sorry. Let's screw that. I screwed that up. Monday is down 5%. Asana's only down 20%. Cool. What's up?
All right.
Yeah.
Here's my couple things.
Yep.
First of all,
yeah.
when I pitched Asana,
Uh-huh.
and I let you as well as the audience know that I added it to my IRA.
You did.
I said this is not one of my buy and hold forever stocks, and you were like, "What do you mean?"
I didn't know you could do that, but all right.
We had our conversation.
Yeah,
about
I remember. Yep, I remember that.
Okay. Follow up on that.
Yeah.
I sold.
Okay.
Some of my Asana on the 17th. It settled yesterday. Because
did you chamath us? Is that what you did?
I trimmed some. I didn't sell all of it, but it was because
chamathed us.
It was up like 30% in like 2 weeks. So
I was like, you sold on the 18th? No, you sold on the 22nd.
No, that's when it settled. I sold on the 17th.
Oh my lord!
I sold at $73.79.
I don't even know what to say right now. I should be proud of him, but I don't think I am.
I didn't want to come out here and tell everyone I sold because in case, I don't know. But so that's my first thing, right? Is that I added it to my IRA when it was at like 40 or 45 or something and said this is going to buy or hold forever.
You bought it down here.
Yeah.
And you sold it up. Wait, let me zoom in. Maybe
I bought it at. Oh yeah, I guess we can see where I bought it at too.
Hold on. Let's. He bought it down here, and he sold it up here. He sold it at the high of the move.
I bought it. Well, okay. So here's the thing. I bought it at 51. So I sold it at 73. So that was a good. But now it's below my entry, my other shares. So I trimmed my position. I'm not completely out of it.
So
it's still in my IRA.
Yeah. Okay.
I almost sold more yesterday, and I didn't. I wish I did because the chart started looking ugly. It looked like it's for sure coming back down.
Yes.
So that was my first thing.
Part of me is proud of you for that. Part of me thinks
I should have been more
part of me. No. Part of me, same thing as Patrick Starr, paper hands. Although you're upfront about that fact going in. So
exactly, that was my whole point.
I have no reason to be mad at you.
I was upfront about the fact that this isn't a buy and hold forever. This is more of a trade. Yep. I was gonna let some shares of Asana just like ride in my IRA, but now, I mean, good companies don't typically go down 20% a day.
In this market, they do. Everyone, anyone's liable to go down 20%.
So here was my second thing.
Yep.
We've seen this a couple times with and this has been in my 18 months in the markets, this has been the craziest earnings season I've ever seen.
Okay.
I'm just kidding. I've been in the markets.
I was gonna say that doesn't exactly say a lot. We're talking about
Either way, this is the most crazy earnings season I've been a part of. I don't know if Spencer would agree. Oh, look, Monday.com is, God, the people that write these, what are the headlines called on TV? I know there's like a specific word.
Chirons.
I learned in journalism school. They love that job. The case of the Mondays. It's Wednesday though.
Yeah, I don't know.
So we've seen this with other earnings reports this year where companies will move wildly off of another company's earnings report. And it's not always a bad thing for a company like Asana who reports after Monday and they get this bar lowered, right? We saw this with Snapchat. Snapchat, after Facebook reported, same thing. Down 20%.
Right. Okay, so let's bring this into a more relevant one, though. Let's look at Lowe's and Home Depot.
Yeah, same thing.
So Lowe's reported this morning, right?
Yeah.
And, whoops.
Also, you should also be proud of me. I was making an investment in either Lowe's or Home Depot a couple weeks ago, and I picked Lowe's.
So Lowe's reported this morning. Home Depot is the day ahead of them. So let's look at the Home Depot chart. Lowe's numbers were good. They were better than expected on the earnings and on the guidance. All right. Now, Home Depot's numbers were good too, but they talked, I guess, in the release and on the call about margin compression as it relates to supply costs and weaning demand for home improvement projects. But anyway, Lowe's numbers were good. I don't know if Lowe's said the same things, but it's moving in the exact opposite way today that Home Depot did yesterday. It's funny that they are correlated, though, right? If you look at, like, yesterday, Home Depot, which is in purple here. Oh, wait, let me get my symbols up on the screen. Home Depot is in purple. Home Depot dragged down Lowe's yesterday. Why don't I have my... hold on. Oh, there we go. Is that why? No. I don't have my symbols up on the right. Whatever, who cares? Home Depot dragged down Lowe's yesterday. And this morning, Home Depot opened higher on the back of Lowe's. And now they're both trading down from the open. So, go figure. Oh, that's weird. I want my... I don't know why my... symbol. Whatever, who cares? Whatever. I'm not gonna deal with that now. Okay. So anyway, Lowe's, Home Depot, right? The bar is lower, and in this case, they're both trading in the same direction regardless. But Lowe's report was good, and they opened higher. They had a great rally overnight. They've given some gains back now. It was a great overnight rally for Lowe's. So, yes, your point stands about bar lowering as it relates to Asana and Monday. When does Asana report? Do you know the answer to this? March 9th. It's right there. March 9th days. After the close, 2 weeks from today. Is the bar lower for Asana? Yes.
The real question is how many shares is Dustin Moskovitz adding today?
Yeah, that's a good question.
And I wonder if he sold any when it went up to like 70. Because I realized this too about like, and I do still think like that's a very bullish sign and seeing that many insider buys, but is it possible to me that he was down on like so much of his position in Asana that he wanted to lower his cost basis and then maybe he's like selling some on the rip to make some money back? Sure, that's possible too. But if you were just going to try to make some money back trading, why would you do it with your own stock?
Trying to speculate on his motives, I think, is a dangerous game.
Yeah, it's very true.
So,
it's fun. I like speculating. Is fun.
Yeah.
There should be a rule that if you're like a CEO and you buy stock, you have to hold it for a certain amount of time.
Like you mean like a CEO?
Yeah.
I think they had. I thought they had that. Well,
maybe
they don't have that rule, but they have like blackout. They have blackout windows when you're not allowed to sell. You're not, if you're an executive in a company, you're not allowed to sell your stock.
Born to be Free. Is there a Twitter account for the last group, Upstart Invest Trade? I don't know.
Yes. Born to be Free. There is a Twitter account, I believe. Gosh, let me one second for you. Pardon me for you. I got you. There is. Let me find it for you.
What about Upstart stock?
It's Born to Be Free. Ready? I'll put the link in the chat. Oh no, that's not it. Damn it! There's so many freaking companies called Upstart. That's the problem. Is this it? All right.
What's up with Coinbase? 30. So we touched on this at the beginning of the show or a few minutes ago, so you can rewind. I'll give you the TLDR right now. Essentially, their Super Bowl ad with the QR code bouncing around the screen. The CEO, and I don't even know why he did this, took to Twitter and was like, oh, people are asking how we got the idea for the Super Bowl ad. Here's how it happened, and basically said that the Coinbase team internally came up with the idea on a whim after shooting down other Super Bowl ideas. And then the CEO and founder of an ad agency, or sorry, I don't know if she's the founder, the CEO of an ad agency came in and said, what do you mean you came up with that idea internally? We pitched you this idea and gave receipts, like quote or page numbers of where in their pitch the idea for the commercial was. So bottom line, Coinbase is in hot water for essentially I don't even know if stealing the idea, but taking inspiration for the Super Bowl ad and then claiming they came up with it. It's not like, oh my God, go sell Coinbase stock, go short it, but it's just not a good look at all.
No,
for a company.
Not great. Calling it a controversy, maybe a little bit strong, but you know what?
I think it's
alliteration.
I think it's a controversy.
How about a controversy?
Okay.
Right?
We can do that.
Okay, let's go with that. All right. Did we preview what guests we have on today? Do we even play the intro yet? Or did I miss that?
You did miss the intro.
I missed it, sorry. Born to Be Free. I'm working on it, man. Give me a few minutes. I don't know. What was I going to say? Okay, guests for today. We have on the show in a few minutes here, we're going to be joined by StockMarketWolf. What time is that at?
12.
12, okay.
And potentially another special guest at 12:15.
Potentially, guys, at 12:15. And then at 1, Jamie Schmidt would join us. She is the founder of Schmidt's Naturals. She is a mentor on the Going Public show. She's going to tell us all about how she launched a deodorant company from her kitchen while she was pregnant, which strikes me as difficult. But I'm no expert. And then Jesse Kaylor will be on at 1:30. Does Jesse have the links? Is he all good?
Yeah.
Okay, sweet.
I do. Hold on. So for Fergu, no more spamming in the chat. I'm going to put you in the penalty box. That's a 5-minute timeout. But why is Coinbase advertised on the Deep State website?
Whoa, what the hell is going on with the spam right now?
Or WEF, World Economic Forum.
Fergu is not a person, right? That's a bot. That's gotta be a bot.
Well, I don't know. I mean, so here's the thing.
All right, Fergu, you're going to timeout for the spam.
Yeah.
Okay.
On the World Economic Forum website, I don't know. I mean, are they advertising on there? Everyone's got to make money, even the World Economic Forum.
I don't know. I have opinions.
I'm on the website right now. I don't see any ads.
I have opinions about the World Economic.
There's a bunch of like conspiracies about them, right?
I don't want to say I almost went because I didn't almost go, but there is a brief moment where I thought I was gonna go
like to the forum.
Yeah, like a couple years ago, like for Benzinga.
Oh,
but I
cool.
obviously didn't. I think the entire thing is freaking pointless.
Is this like Soros? This isn't Soros, is it?
No, it's the World Economic Forum, and they do this thing in Davos every year in Switzerland, and all the rich people just fly there on their private jets, and they talk about big issues, and then they all go back to their lives. The whole thing is freaking pointless to me. Sorry if I offended. Actually, no, I'm not sorry for my opinions. But the whole thing is just it's like Sun Valley is summer camp for billionaires. Davos is winter camp for billionaires.
Got it.
Boom. There we go.
Yeah, I've heard some. I don't know. I got to do some more research on that before I have an opinion.
You do your own research, as always. Do your own DD on Davos. Okay, let's talk about stocks. Not like let's talk about the overall stock market here. Let's bring up my Let's bring up my watch list of the market today. Let's get the charts off the screen here.
Palladium, I do.
Let's look at the market today. What jumps out? Well, we're down again. Everything except for staples, energy, real estate, and healthcare is in the green, in the red. Excuse me. Everything else is red except for those four. So just a down day across the board. Notably, ARKK. Look at that, down 2% today. $62 now for ARKK. We are at the lowest point, and I don't want to harp on this too much because we talk about Cathie a lot, but we're now at our lowest point.
Speaking of Cathie, should we talk about Palantir?
Yeah, I do want to talk about that. Wow, lowest point since June of 2020. Yeah, I honestly, so I own the ARKW. I do think that we are going to get back to my cost basis, which is I bought it in the 60s. I bought ARKW in the 60s, and I think we're heading back there, frankly. No, I do want to talk about Palantir. So, Cathie Wood / ARK Invest has been unloading their Palantir position, like selling 10 million shares a day of Palantir. Just to put that in context for you, yesterday, Palantir traded 104 million shares. And ARK Invest accounted for like 10 million of that. So 10% of the daily volume in Palantir yesterday was ARK selling. Now, are they done? I don't actually know. I have not looked. Does anyone know if they're done?
If ARK is done selling?
Yeah.
I thought they sold all their Palantir shares.
They sold more yesterday.
I thought they unloaded every single.
They're like blowing out of their Palantir right now. Dennis had a pretty, I'll call it pretty compelling argument for why you want to buy Palantir here. So
did Joel buy Palantir?
No.
All right, I'm out until Joel buys it.
Honestly, from a long trade here, I love trades where you have a clearly defined out, right? You have a clear out in Palantir. You want to buy Palantir now? Where do you stop yourself out? Easy, $10, $10. Yesterday's low was 10.30. Just go to the round number, or even give yourself go 9.90, right?
Yeah.
That's easy.
Yeah.
You're risking 50 cents of downside here. Honestly, I might take this trade with end stop at 9.90 or whatever. What's the all-time low? What's the all-time low in Palantir? It's like 8.90, right?
But Palantir was a SPAC, right?
No, direct listed. The all-time low is 8.92.
Oh, it just happened to open at $10?
Yeah. 8.92 is so maybe, or 8.90, excuse me. So maybe you want to stop yourself out at the all-time low, 8.90. You want to give yourself some even more breathing room. Risk $1.70.
So my thing with Palantir, and this is one that
I might do this.
I don't hate the trade, Spencer, but here's my thing with Palantir, and this is a stock that we've covered closely. It was a fan favorite as it ran all the way up to, what was it, $35-40.
Oh yeah.
And then honestly really held up well for a while after that. I never really liked the company. Like I've always said this, I don't really understand what it seems very, I don't understand.
No one knows what they do.
No one knows what they do.
They don't even know what they do.
They don't
I
even
think.
know what they do. But
maybe they do. I don't know.
It's like what we were talking about with Tim Quast. At the end of the day, the stock market is what someone's willing to pay for any given name. And now that it's gotten this out of favor, like I don't know if there are as many people out there willing to pay to own shares of Palantir as there were when it was up at $20. I mean, if it starts roaring back, if it goes from 10 to 12 and it's up 20%, and then it goes from 12 to 15 and it's up another 30%, that might get people back interested in it. But at the end of the day, I don't think this has the same fanfare that it did 6 months ago, a year ago, 18 months ago.
Oh, it definitely doesn't. That's for sure. Because there's a big difference between 30 and 10.
Yeah.
Right?
I've always thought it was, said Marshall saying, don't fight the trend. It's junk. I agree. But on Spencer's point, on trades like this, you have a clear, defined out.
You have an out. There are worse things to do. Any trade with an out is a good trade to me.
But here's my thing with I disagree with, I guess, like the idea of that, like, oh, just setting your stop loss 30 cents lower and you have a clear, defined out and there's not a lot of risk. What happens if Palantir is down 20% pre-market tomorrow? It opens at $8.
I mean that's a risk,
right?
But what would?
I'm just saying, I think there's more risk involved than just saying, oh, set a stop loss tight, and it's basically a risk-free trade.
No, it's not. I'm not saying it's risk-free.
Right.
You will lose, right? Like, if you buy now and you sell it and you stop yourself out at whatever $9 and you sell, you lost. But that's okay. Losing is fine. We all make losing trades. If you don't make a losing trade, you're a liar. So,
are you calling me a liar?
Yes.
Something just ripped. Let me see what it was. Was it overall market? I think it was overall market.
I'm hopping into my.
Oh, Spencer's making a live trade.
No. Well, not just yet. I'm not.
We are getting a nice little pump in the overall market right now. I'm seeing basically everything in my portfolio is up. Not today, but over the last 5 minutes.
All right. I just had to. It's been a really long time since I've deposited money into my.
Ooh, Zed's got another one like Palantir. We should check out Fubo. Luke was telling me he loves Fubo here under $10.
I don't know. I'll pull up Fubo.
I'm just kidding. Luke didn't actually say that. He was just walking by.
More like no. Am I right?
Ooh.
Yo, is this an all-time low? Stop.
784.
Stop.
It's got to be.
No, it's not.
No.
Oh my gosh.
What were the highs on this? 63.
The all-time high was $62.
Oh, Andrew in the chat's asking a good question too. Did you sell BCRX?
I'm glad you asked, Andrew. No, the answer is no. The answer is no, I didn't. This is a great lesson in, and look, I have this Webull account. It is my YOLO account. I don't take it too seriously. But this is a lesson in not ignoring. And it's such a small trade for me, so I kind of it was out of sight, out of mind. But if I had even taken the easiest risk parameter, if I had taken even the easiest thing I could do and set a stop loss, I would have been out by now, probably. Alas, I am not. I had no stops in this thing. I hadn't looked at it, honestly, since last week. That's the truth. I haven't looked at it since Friday. I know it opened down today. They had earnings.
No, he's talking about Fubo, I believe.
No, BCRX.
Oh. Excuse me.
BCRX. I'll be honest, and this is not good of me. I didn't even know that they had earnings. Although, if I had known, I don't know how it would have changed my. I don't know if I would have.
But that's
sold.
okay for something that's just a very small position for you, like you said it is.
I know, but it's so small that I just forget about it, and that's how you end up losing everything. You wake up one day and you're down 40% because you didn't even notice your stock was down because it's not one I normally look at. So anyway, no, I don't. I still have BCRX, and I will need to figure out what I do here. I probably let's see. My cost basis in BCRX was cost basis in so I'm down about 9% now.
Will Alton is asking who uses it though. I've never seen it in the real world. I don't know. I believe he's referring to Fubo.
Oh no, I didn't. That was a lie. I used Sling. Never mind.
TV. Yeah, I saw a tweet the other day that was on the Roku remote.
My cost basis is 1866 in BCRX.
You know the Roku remote?
Yeah.
The buttons on the bottom, I guess the new ones have like Amazon TV, Netflix.
Yeah, they pay a lot of money for
Hulu,
that.
and Sling. And someone's like, how the hell did Sling get added on
They pay a lot of money. That's how.
I mean, if Fubo did that, maybe their stock would be a little bit higher. But it's not something that's like 100%, right? That you can kind of trade what you know in real life. But that is something that I like. Like if a stock like Fubo, if I don't know a single person, which Spencer and I are both like sports watchers, a lot of our friends are too. If I don't know a single person using Fubo, that's a red flag for me. And I felt that way about SoFi. I asked Spencer that. I was like, Spencer, do you know anyone that actually uses SoFi?
It's fair. It's not a yeah. But it's not a bad thought process to have.
Yeah, just using your like real life experiences can sometimes be a way to help you invest. Not like 100%.
Look, I mean, you guys know I bought SoFi at $20. All right. Obviously, I'm not thrilled with the fact that SoFi is in single digit. Or it's not now. It's back up above $10. But this is by far, and it's not even close, by far the biggest bag that I am holding.
SoFi?
SoFi.
You're not alone in that.
It is by a mile. Because I sold whatever I was down in.
Should I tell my mom to sell it?
Whatever I was down in, like I sold a bunch of stuff for tax loss purposes in December. Not that I didn't have, I had a couple of things I was down, a little bit in, but nothing too crazy. But even before that, SoFi was my biggest bag. It remains my biggest bag. That being said, let me just tell you all, and this is a great lesson as always in diversification, because my SoFi position, oh damn it.
Vape King in the chat saying he loves SoFi. Yeah, I mean you can Google Palantir, but who knows? Who knows what they do?
And we are going to bring on our guest in a second here, but let me just tell you briefly, just so you can understand, like why my head is at where it's at. I can't log into my account right now.
So. All right, let's go ahead and bring our guests on. We'll get back to SoFi later.
Yeah, I can't even log into my. Oh my gosh! Come on, Spencer. All right. Who's our guest? Let's bring him on.
Our guest is StockMarketWolf. You may know him on Instagram. He's got about 75,000 followers.
Locked out of my freaking account.
Oh my god!
Can't even log into my account correctly.
Maybe Wolf can help you. But Wolf's got a really cool story. I'm not gonna I'm not gonna tell it for him. But he's a guy that went from working a job at a mall to trading. Not full time. He's got a different job now too. But let's go ahead and without further ado, give Wolf our special intro and bring him on. Mr. Wolf, how you doing?
What's going on, guys? How are you?
It's been a minute.
Wolf, have you ever gotten locked out of your brokerage account? It just happened to me.
No. Sorry, man.
Oh no.
Before we get going, what's XSplit?
That's just the webcam I guess I use.
Oh, okay.
It's just like I don't know how to take that off.
Today's brought to you by XSplit apparently.
That's brought to you by XSplit. But Wolf, or
how's it going, man?
Call you
Andrew's fine. Andrew's
fine. Okay, yeah. Andrew. I didn't know if you wanted me to dox you or not. Andrew, I don't know if I probably didn't do you a great service, but for those of folks that don't know you, do you want to go ahead and give a brief introduction?
Sure, I'll try to make it as brief as possible. My name is Andrew Diaz. I'm the founder, I guess, of StockMarketWolf. You could see me on Instagram, but whole journey started 2009. I was a single dad at the age of 19. I was working at the mall for $7.25 an hour, and the day my life changed was the day I couldn't afford diapers, and I had just got let go from work because I was focused on school and whatnot. So that was pretty hard. So that following weekend, I went into Barnes & Noble. I've always been a book nerd. So I went into Barnes & Noble and I picked up this book. I saw it and it drew my attention. It was called Rich Dad, Poor Dad by Robert Kiyosaki, which majority of people have read, right? And here I am, this poor dad, right? Single dad, 19. And I see this book literally says Rich Dad, Poor Dad. So I started picking it up and I didn't have money to buy the book. So I spent the whole day reading it. It only took me a couple hours, but in the book, I learned three main important concepts: the importance of business, the importance of real estate, and the importance of investing. Well, I didn't have money for real estate. I didn't really know too much what to do with business, but investing seemed kind of cool because I've always been into video games and computers and so forth. So I was like, oh, maybe this could be like a nice transition. So started what I did following weekends leading up, even while going to school, was I would go and spend time at Barnes and Noble getting anything I could get my hands on, book related to trading, to investing, to personal finance, to anything that I could learn about money. And long story short, put myself through school, started 2014, I got my bachelor's. And then right during that time, I started working at Amgen. And from going from 725 to then working at Amgen, I was making, a nice, $70,000 salary or what have you. And so all the same time while learning stocks, right? And once I had that money, I put more than 3/4 of that into stuff that I knew, which is biotech and science stuff and tech stocks. Long story short, 2016, I make my first mill. Also, by this time, I end up getting my first master's degree, which is a Master of Science in Biotechnology with an emphasis in biomedical tissue engineering. And then following year, 2017, I get promoted up the ladder in Amgen, but then I get my second master's, which is my MBA. So I have two master's degrees, a bachelor's degree all in the science field. My MBA is with an emphasis in finance, obviously, in management. But then from there, really started having the income to do some things. But then it took me from 2009 to 2016 to make my first mill. And I read this book by Grant Cardone, which is the 10X rule. And I'm like, okay, well, it took me this long to make it. How can I start making this quote unquote quicker? And that's where like the day trading piece came in, and utilizing that money and the profits that I made from that to just keep throwing into my long-term investments. Long story short, today I run the StockMarketWolf business. We've had at one point, north of 6,000 people in our group during 2020. Today we have about 5,000 or so. And that business has taken off. It all started back in 2016, helping a single mom. And my wife convinced me, like, you need to make this a business. You need to help other people. And here we are. So that's a little bit about me real quick.
Yeah, and I did just drop that link to your Instagram in the chat, Andrew. And so something that I'm curious about, and I personally actually haven't read Rich Dad, Poor Dad, but I imagine when he's talking about investing, he's talking about more long-term investing. How did you kind of transition, or how did you go from reading that book to saying, okay, I want to trade stocks, which is a little bit different than, long-term investing?
So actually, it's one of my favorite books, right? So it's right here already. But in the book, which is right there, he actually does talk briefly about how he treated small caps.
Okay.
And so, of course, he's more into the long-term game. And so I just went into Barnes & Noble the following weekend, and it was called How to Make Money in the Stock Market. And I got that, and then there's different approaches, right? You could do investing, you could swing trade, you could do option trading, you could trade the small caps, which is what I do majority. And I didn't really get into day trading per se right from the get. Majority of the stuff that happened from 2009 till I made my first meal in 2016 was all long-term investing. I just kept throwing stuff into all of these things that I knew from a science perspective of things that I think had potential. And so then from once I made that first meal, then it became Grant Cardone's book of 10X rule. And I was like, okay, let me see how I can do this, not quicker, but more efficiently, where I'm not waiting this long period of time to make a meal.
Did you ever use, like, you had mentioned you were a gamer your whole, did you come in then and kind of trading what like, were you buying NVIDIA because you were a gamer, or did you kind of just, or science, biotechs, or what were you trading mostly?
Yeah, I did pick up like NVDA. I had picked up like, of course, your FANG at the time: Facebook, Amazon, Apple, Netflix, Google, Tesla when it came out, Amgen, which is where I work, AMD. I mean, there's a bunch of stocks that ended up just like blowing up by the time that 2016 had came around. from that time that I started initially buying them as soon as I could in 2009, 2010. One of the questions that I will get is like, well, if you had got fired, how did you end up making money to start, investing in 2009? What I did, and Gary Vee talks about this now, which is garage sale flipping or garage arbitrage, where I would literally go and find stuff for free and then flip it. And then since I did work at Foot Locker, Champs, I would get discounts. And so I would start to flip those, resell those on eBay. And little by little, just started doing whatever I can hustle wise to make, 500 to $1,000 that I could throw into the market.
Got it. So let's flash forward to now. What have you been trading recently?
Well, recently, last week.
And if you want to share a screen, you can. If you got like charts or anything, we only got about five minutes though. So let's go through some names you've been trading recently.
Yeah, let me go to share. How do I share?
There should be a button on the bottom of the website that we stream on that just says share.
Okay, there it is. Okay, so can you guys see the screen?
Yep, let me go ahead and get it pulled up. Whoa, that's a lot going on there.
Yeah, there's a lot. But the one that we traded last week was ISPO. And ISPO
Inspirato.
went from about $10 all the way to 108. So it was a huge move. It was, 1,000% return, right? Today, so ISPO was the big one last week. And you don't really have to use a lot of money to make a lot of money. You buy 1,000 shares at 10. Not to say you would always sell at this 108, but there's strategy that I use to be able to take profit along the way. And make sure
what would you see in Inspirato in the chart at like $10 for you to think, okay, this could really run?
So to give you my strategy, to give everyone my strategy, to try to give you as much value as possible, what I do is trade pre-market. And so pre-market, I'm looking for stocks that gapped up a minimum of 5 to 10%. There's an easy way to scan for that within Thinkorswim. And then from there, once you've made your scanner within Thinkorswim, I have the charts right here. And then so I'll filter by market percent change. And then from there, I then use an Excel sheet and really dive into different stocks, right? And so I keep a running total of all the stocks that I trade. But from there, then I start to put out the entry supports, my stop, my PT targets, etc. But for Inspirato, for example, this stock on this particular day had already gapped up pretty big. It went from $10 to $30 pre-market. So then when the market had opened, what I was looking at is for a retest kind of this level. And what I like to do when I trade is I like the candles to be above the 920 in midline VWAP, as well as get a crossover on the MACD. So once it started to kind of retest this level here at around the $30 point, or like, what's this, like 28, then I'm like, okay, as long as it's holding this 90 EMA support, I'll take a trade. But then what I like to do is calculate what my drawdown and potential loss can end up being on any trade, and I prepare for that. So I usually per trade will put in somewhere between $10,000 to $20,000, but I'm only risking between $1,000 to $2,000. And so as long as the stock stays above the 9 EMA, I'm willing to let it ride. And as it rides up, at the first 5 to 10% profit, I'll take a little bit, and then I just let the remaining shares ride. I move my negative stop up to be my entry. This way, no matter what, I walked away with money. To give you like a real day example of another stock, today we were looking at INDO, and today I was targeting 7.5. Okay, so from 7.5, I determined my stop would be 6.5. So let's just look at INDO, and this one was a stock that we traded yesterday that made 67%, and today it made just a small measly like 10%. But yesterday we traded it, and what we were looking at was an entry of 5.4. So if I go back to that Excel sheet, we were right here. INDO was right here. We were targeting 5.4 for entry and a 4.8% stop, which would be 13% drawdown, right? So what I was looking for yesterday was, because we had all this pre-market resistance at 5.4, that's what I was waiting for the breakout. And then during the open, we have this break above 9 EMA, 20 EMA, VWAP, and then it's at around 525, 540, which is my target. So in order for me to know how much to put in, I don't always pick the same number. So what I will do is base my trade of how risky I want to be based off of my account size. So let's just say I had a $250,000 account, right? And with INDO, I have a 13% stop. So then if I was willing to risk 3% of my account, I would then just take this divided by the amount of what my risk would be at 3%. And I would get a dollar value, which would be 60,000. So I could spend 60,000 on this trade. And if I lose 13%, I'm only going to lose the 7,500. So then with that 60,000, all I need to do is calculate how many shares I can buy. And then that's a very simple calculation of just taking that number, dividing it by my entry. And then that gives me the quantity of shares that I can buy. So then I could buy 11,000 shares, and then I want to round this up to like a whole number, right? So 11,000 shares, give or take, right? So then when I come back to the trade, where'd it go?
Yeah, it's a lot going on those screens, man.
Yeah, sorry, man.
Yeah.
When I come back to the trade and I'm about to take it, I just have my shares listed in here, like 10,000 or whatever, how much I can spend, right? Which in this case was 60,000. And then once it hits that, then I'll take my trade, and then I calculate where that stop is going to be. So I always know where my entry is, where my stop is at. And then from entry, if it moves up 5 to 10%, I take a little bit of profit, and then I let the rest ride. So from that 540 that we called out yesterday, it went all the way up to 8.9, which is 67%. So I didn't get the whole profit, but you could get the idea. So that's INDO. And then today we also traded INDO. And this one, I had a target for going back. I had a target today for 7.5. So if we look at that chart today, going back to the main screen, INDO, here's 7.5, right at entry. At market open, we get that break of 7.5, and it goes all the way up here to 8.5, just a shy of 8.5, which is about 13% or so. But let's say I use $20,000, 10% of that's $2,000 trade, right?
Yeah.
So,
all right. Well, we got to run, but I went ahead.
Sorry, man.
Oh, you're good. Posted your Instagram in the chat. If folks want to find more of you, you can go check them out on Instagram. StockMarketWolf. Andrew, always a pleasure to talk to you.
Always
have
pleasure, man.
Yeah, have a great rest of your day, man.
You too. Bye.
All right, we got a surprise guest coming up.
We do.
Aaron, what did you do?
I reached out to my man on Twitter, and I didn't tell you about it.
Yeah, that's true.
Well,
he did not tell me
I
about it.
told you we might have a guest joining us at 12:15. You said okay. Sounds good.
Yeah, I had no idea who he was talking about. Before we bring him on, you want to get some guesses in the chat and see who?
Yeah, let's see who we got.
This is a stock market guy that you've seen on TV many times.
Seen him on TV.
You've seen him on TV many. He's been on Benzinga before, but it's been a minute.
Been a minute.
We definitely give him the special intro, right?
Yeah. Let's give him the new special intro.
The new special intro?
Yeah.
Where is that?
It's all the way. I got it.
Oh, it's at the bottom. I found it. All right. New special intro.
Mr. Nigerian, how you doing today?
What's happening, guys? It's great to see you. You guys are so good. I just want to tell you that from the get-go, because if we have an argument later, just know that I already give you a compliment.
I appreciate that.
You guys are fun. You're really, really good, and it's fun to watch. I was watching you before I came on, and all of a sudden Sully was talking about me on TV, so I had to, go back and forth. I mean, it's been kind of fun, but it's great to be with you guys, back with you guys.
Yeah, it's great to have you back. We do the same thing while we're live here. We've got CNBC going on behind us, so we'll probably see your brother here on TV.
I just saw him. I looked up and I saw him. And I was like, wait a minute, I got one over there, one over there.
And we got Pete. He's with the cool guys. John's with
yeah.
So Pete. So Pete from Market Rebellion, you want to give us a quick rundown what Market Rebellion is?
Yeah, it's an interesting company that John and I created. It was a follow-up to Option Monster that we eventually built a brokerage with Trade Monster, sold that to E-Trade. Now that's part of Morgan Stanley. And once we got past all the different levels where we could do it again, we've done it again. And we started it with Market Rebellion, and it's essentially a very similar product where it's educational on one side, so that we want people to understand the options world, so they just don't jump in and have a bad experience. At least they understand what the risks, what the rewards are. So we have a very big branch of our company is educational. The next side is all the unusual options that we've got. And we've got all different levels of what we offer for people if they want the stuff that literally, I'm not kidding you guys. We're sitting at about 40 to 50 unusual option activities every single day, or more. It's been incredible. And as you guys know, you follow the option markets as well. I mean, the volumes are off the charts. It's not unusual to be somewhere close to this year. We've been averaging close to about 42, 44 million contracts a day, years ago. But when I started on CNBC, we were in maybe the 12, probably the 12 million area. Wow. and that was back in 2007. And then by the time we got to 2019, we went over 20 million a day. And now here we are, not too long after that. And here we are trading 40, 44 million contracts a day. So it's really important for us to make sure that people are educated. And when they are, then they can see the unusual that we're seeing and understand the risks and rewards that they can have.
I just want to note, and the chat's all over this as well, is Pete apparently brought the green with him, because we just turned green on the SPY. We're green on the Russell as well. So 2 of the 4 major indexes is green on the day. SPY literally just went green like a minute ago. So thanks for that, Pete.
And I just got to give a quick shout out to Market Rebellion, whoever runs the Twitter over there, Pete. You got to give them my regard, because the Twitter's fantastic. I follow probably hundreds of Twitter accounts that tweet about the markets, covering what's going on, and Market Rebellion is one of, if not my favorite. So great job there. I like the there's a daily tweet where they say the most traded contracts of the day, right? Yeah. AMD 25 or February 25 120 call, and that to me, that's such a great way to just get quick info.
Wait, I have a question. Yeah. Is that kind of an indicator, Pete? Is that a bullish or a bearish signal? To me, it would. I don't know. That's why I'm asking you. Actually.
What indicator? Well, I seeing the option.
No, not you specifically. I mean, the fact that massive volume in these contracts.
And that's the one important thing, guys, that you guys know, but I don't know if everybody else out there does know. So I will say this: it's interesting and it's fun to point out the huge volumes. What's really important, however, and I see a lot of guys who do come on TV who talk about options who are, I'm telling you, they're wrong about what happened on the trade. And I'm not being offensive. I'm just telling you, volume tells you something. It tells you that people are interested, right? And every single day, it's Apple, it's Tesla, it's AMD, it's NVIDIA, it's all those kinds of names are in that top group. But I think what's more important than that, and this is why, our services, cater to this, is buying or selling. Are they buying or are they selling? Because they could be selling. There's no reason that if somebody has a huge, I can tell you this, every single stock that I own, as long as it makes sense, I sell options against every single stock that I own. And it's my way of creating a dividend stream that might exist already. Maybe they're giving me 2 or 3%. Well, at the end of the year, I can, without going crazy, it's very easy to add another 10, 20% to that if the stock does nothing. And so that's kind of the goal of when I do own stocks, I'm selling options against it. But then again, that's volume, right? And if I'm selling there, people say, oh gosh, there's a lot of volume in here. But yeah, but what are they doing? Are they buying or selling? So the most important thing is to know if they're buying or selling. That's just a giving people a little bit of a flavor for where is the activity? Is it in GameStop? Is it in, all those meme stocks? Or is it in the big names like it is and has been lately?
So I know you saw us talking about ARK earlier.
Yeah.
Did you say you saw some unusual activity in ARK puts today?
I did. As a matter of fact, I'll tell you exactly what I saw here. I'm going to do a quick click over here. So this just hit while you guys were talking, and ARK was the innovation fund, ARKK. It was trading around $62 at the time, and they bought the April 55 puts. And we know that because our systems allow us to know. They bought those puts, but they also sold the 50 puts. So basically, guys, you know this. It's a spread, and it's a put spread. So the most you could make is $5 on the spread. But the good news is when you're doing a spread like this and you're paying $3.30 for one and selling the other for close to something north of $2, that gives you the opportunity then to have a spread on where you've reduced your risk down to a little over $1 rather than putting $3 out there. And you've also reduced how much you can possibly make on the trade. So you're paying $1 to make $5. That's what you're looking at on a trade like that. I immediately, just so you guys know, the second I see a trade like that, if I like it, if it makes sense, if I think that Cathie Wood still has a little bit of pressure on her, I will jump on a trade like that. And I did jump on that one just between all of us.
Nice. So you saw the unusual bearish activity in ARK. It made sense. So you decided to get into it as well.
Yes. Yep.
So last time we were on a few months ago, I know one of the stocks we've talked about, and I've been following you. I've been following the stocks we'll talk about, so we can talk about some of those, AMD, Tesla, whatever it is. But one of the stocks we talked about last time was Celsius.
Yes.
How do you feel about Celsius now? CELH.
Not as good as it when we talked. When we talked about that, it's a great stock. I think that they have a lot of promise, but like all of these stocks, and this is something, that you guys hear me if you've got the volume on, you hear me on TV, I talk about it all the time. These very high multiple stocks are something that have to be considered. And this is one of them. And, they're in that growth stage where this is not a pandemic stock, by the way. This is an energy drink. It also has a healthy side to it. It's a calorie burning thing and all those things that go into it. So that's what intrigued me. My daughter convinced me into the stock. I think we both got in the low 40s. It ran up, I think, close to 100. I did not sell. I have sold calls against this stocks, the entire way along the way, rolled with that. But and that's helped along with some of the punishment that it's taken. But let's be honest, anything with a very high or a no multiple stock, that's what people have been going after. And yes, they are. It's like the ski jump in China, right? I mean, it's the land is just as rough. But I still think that the company does a great job. I like it for the reasons that I liked it when I bought it. I thought it was ridiculous that it did run as fast as it did from 40 somewhere close to 100. So with all of that, I was just holding on to it because I believe in the company longer term. I think this is the next Bang or Monster or whatever energy drink that people want to focus on.
Okay.
I think this is in that category, but I also like the healthy side of it as well.
That bodes an interesting question. We're all dealing with this in our own way. You've got a stock that you bought a while ago for a long-term position, and you're getting you're getting hammered in it. How do you deal with that emotionally? Do you just not look at it ever, and that's
no? I think it's foolish not to look at these things. I think you look at them, but I think at the same time you have to make a judgment and a decision on all of these things, right? And so, like I was saying, in the case of Celsius, what I liked about it was the longer term side of it. And I'm now sounding like Cathie Wood a little bit, where I'm looking for this in a longer term. And the reason I'm looking at it that way is I knew when I bought it, they don't really have, strong enough earnings yet. They still have to gain market share. They have to do all of these things before they can look more like a Monster or some of those other types of things, right? So I went into it with that attitude. And, the good news is, lucky, but, we're in it approximately 42, let's say. And even though it's pulled back and it got all the way back down there again, it's gotten a little bit of a lift of late. But these are the stocks that people do target. And I think what you have to understand is if you have a stock that was pandemic driven, now you've got a bit of a problem because you've got that high multiple that made no sense. I'll give you a great example. And I got crucified on Twitter like so many other people on different things, but I got crucified on Twitter for bashing Peloton the entire way up. And my rationale was that it's not that I hate the company, but I've seen this play out in my life. I'm a lot older than you guys. I'm 58 years old. I watched multiple different times in my childhood and young adult life. I watched my parents buy whatever that latest thing was. Was it a treadmill? Was it a whatever? It sits in the kitchen and it becomes the most expensive clothes dryer ever because everybody hangs their clothes on it. And that's what Peloton is. And I said that on TV many times. People just were after me. No, you're wrong. What people didn't understand is, it's a pandemic stock. And it got way in front of itself. It's a very expensive thing. And it will play out, and it has played out. But people are social. They want to go to it. If you're interested in exercise, let's be honest, you want to go to the gym, you want to go to the park, you want to go somewhere outside, and you don't want to be sitting in your apartment or your house pedaling every single day, because that eventually gets pretty daggone boring and monotonous. You want to get out. So
right.
That was sort of my rationale, and that was way overdone.
That's always been my point with Peloton is why pay the same amount for a full gym membership where you have access to the stationary bikes and all these other things, or just the bike. And going back to Celsius real quick, I think I said this when you were on last time we were talking about it. The biggest differentiator to me and the moat that Celsius has is the fact that it's a healthier version of an energy drink. But I was always worry that Monster or Red Bull or whoever would come out with their version of the healthy energy drink. Now all of a sudden Celsius has even more of an uphill battle to climb to try to grab some of that market share. But let's move on to some names right now. I know you've been liking AMD, is that correct?
Yeah, we had some option activity in there just yesterday. In the early morning, stock was about 116. So right now it's not looking great for what they were buying yesterday, but they came and they bought in size. And you know, the one thing that's unique, and you guys know this, but you know, we were talking about it earlier about buying, or is it just volume? So our algorithms show us, you know, the buying and the sizes and all that kind of stuff. So we know they were buying, and we all know the company pretty well. We all understand supply chain constraints and everything that's been going on. But it's just one of these names that when they start buying in huge, massive numbers, I think they bought 28,000 of the upside calls in there yesterday morning. When they start buying like that, I'm willing to be in that trade because I think that there's a really good chance. I like the company. I know what they, you know, we all know what they do and how many, you know, that they drive into so many different categories, like an NVIDIA, quite frankly. So, you know, when I see that option paper come in and it's come back as far as this stock has come back, I mean, you guys are great about putting these charts up, but it's fallen back from 160. Now you're in the the 100 teens. That seems to me to be a good spot that I'd like to start looking at it again and getting back in, which I did yesterday.
Pete, I got to ask you about energy / oil here, and I don't know how you prefer to trade, whether it's like the USO or the XLE or any of the oil stocks, but that trade is beginning to look, well, not beginning, it looks pretty darn crowded to me.
Yeah. Well, I don't disagree with you, by the way. It's funny. When we started seeing unusual options in there, it literally, I'm going back, guys, but it was November of 2020. It was right when the presidential elections happened. Oil was approximately 38. We literally started maybe a week or so before that. We started seeing monster call buying in just about every energy name that I can think of. And it was crazy. And by the way, that has not really slowed down a whole heck of a lot. I mean, today we have some options in Devon. We also have some in ConocoPhillips. We have some, you know, it's not like we've suddenly cooled off and people are no longer buying upside options in a lot of these names. Now, that doesn't mean that we're breaking through 100, but I've been calling for 100 since it was 60. I just am convinced of it. I'm convinced about the rest of the world and the lack of CapEx that has gone into it and all the different fundamental reasons. But also you've got the political side of it now too, right? The geopolitical and everything that's going on with Ukraine and Russia and trying to get the, you know, energy flows. And, you know, I think there's a lot of reasons why I think that this trade's not over. And I still would prefer to be in options, specifically in those beta names, as I've been calling them forever, you know, and that's Devon. I even throw in a ConocoPhillips, which is a much bigger name, but Apache, APA, which used to be Apache. I keep calling it that. Occidental, Diamondback, all those kinds of names are in that XOP. But I always, just so you guys know how I trade, I don't like to trade ETFs. That's not my thing. I want the bang for my buck out of the, you know, that I can get exactly what I'm looking for, because I get a little bit more when I'm doing that oftentimes than when I'm doing the ETFs. I got nothing against ETFs. I think they're smart, especially for people that aren't you guys or me, that aren't in front of the computer all day long trading. You know, it's probably a really smart idea to be involved in something in a different way than that. But as an aggressive trader who's in front of his screens all day long, and I got, you know, CNBC in the background here, I got you guys, I'm just watching the flows as everything's going by on the tickers. And that's what we all do, right? We do it from, you know, 9:30 in the morning until 4 o'clock.
Yeah. Pete, I know I told you 15 minutes. I don't know if you got a few extra minutes to hang around.
Sure.
This just came up while you were talking about Apache. What's been the hardest like company name change for you in your experience? Like I find myself like I'll still call MO Philip Morris even though I know it's Altria.
It's a really fun question.
What a random question.
No, but it's great. Philip Morris is a great example. I mean, that one's been, it was around forever, and then suddenly you've got this name change, right? And
they still leave the ticker MO. Like, why not change it to ALT?
I'm never called Facebook Meta on the first try.
I have yet to call it Meta, even on TV. I always
did.
Because it doesn't make any sense at all to me, and I understand that, Zuck, I like Zuck, but I do think that he has taken his eye off the ball in a big way. It doesn't mean I don't believe in metaverse, but it does point me to why he's had such a huge slide now with the stock. And I say that as a guy, I own the stock since the IPO. Now, don't I look foolish for not selling it up there at the highs, right? I mean, that looks pretty awful. But I'll tell you, all they do is they've been cash flowing like crazy. They continue to grow. He takes his eye off the ball. He's focused on Meta, which I'm okay with focusing on the next great thing. It's like Apple. There's always something else. But in this case, a lot of money, a lot of time, and he's not going to see results for years out of this thing. So that's what bothered me most. And I think that if they get their focus back, I think the stock can have a rally. If they don't, I think it actually goes lower. And I say that as a guy who owns it.
All right, Pete, before we let you go here, we're getting some questions from the chat. What is on your shirt?
Oh, people always ask stuff like that. I'll be honest with you guys. So I'm lucky enough to be on the water right now. You guys, I know, is there snow in the background back there?
No, not anymore.
It was snowing earlier today, though.
Not as of yesterday.
But I'm in Florida. I moved down. I played for the Buccaneers long ago. I've always told my wife I want to have a house down in Florida. So we're building a house in Florida. And so we're renting as we're building the other one. And we're doing that because we want to be on these guys. You guys wouldn't believe it. This is not New York. These people actually only work 4 days a week down here. I mean, I walk in on a Friday and nobody's in there doing anything. And I'm like, no wonder our house is taking forever to build. But, so it's amazing, this whole process, but it's fun. It's a beautiful day, and I've always got different shirts on. This one's just some crazy, I don't know. I just like the palm tree and stuff that was on it. So that's
well, the chat loves it. They said you've got the best tee on TV. I don't know if they were talking about the goatee or the T-shirt.
Probably both.
Maybe it goes both ways.
Can I tell you how much flack I get for this thing? I mean, there are people who just hate the heck out of me and judge me for my looks. And I always respond back with, I wonder if it was some other part of looks, what everybody would think of your, you're spotting me on this whole thing, whether it's color of my skin or this or that. But because I've got this goat, I'm the worst guy in the world to some people. I got to tell you.
Were you at that Bucks Super Bowl last year?
I was not no, I wasn't. It's great. The Bucks are so great. They treat me great. They offered me tickets. They offered me tickets when I was in LA because I was doing some pre-Super Bowl stuff this year. They're a wonderful organization, I will tell you, because there are organizations out there that are not good with their former players. These guys will let me do anything at any time. It's awesome. Sit around with Tom Brady and hang out and just talk about football and life and financials, because he's got a lot of numbers that you can go through, he and his wife. But they really are a great organization that opens up doors for us all the time, and it's wonderful. It's why I love them so much.
Yeah, I mean, Tom Brady's had an incredible career. He's got that FTX money now.
It's a whole day. He's in a different stratosphere right now.
He is.
Pete Najarian, you know him, you see him, CNBC, Market Rebellion. Pete, it is a pleasure to have you back on the show. Thanks a lot.
Thank you, guys. Appreciate you, man. Take care.
Alrighty.
Okay.
All right. Next time,
always have a blast with Pete.
We gotta get some stock picks from Brady next time.
Oh my God, he's probably all in the crypto stocks.
I don't know. I wonder.
Maybe he's as good at picking stocks.
Dude, I love it. I love it when celebrities talk like stock picks. I love it.
Oh, that reminds me.
Like, just from a content perspective. Guys, also smash the like for Pete Najarian. Aaron Bree set that up. Didn't even tell me he was doing it. I look down and I see Pete Najarian in the studio. I was like, what the hell is he doing here?
Yeah. He came to hang out with us.
It's a total surprise.
Yeah.
Yeah, it was fun.
We need an editor out there, we need to clip out like just the 3-second part where he said like, you guys are awesome or something. And just play that.
Can we get someone on that? And
or the part where he said, I'm watching, I'm always watching the flows. I'm watching CNBC. I'm watching you guys, which you know.
Give him credit. He knows how to butter up his hosts.
Yeah, exactly.
He knows how to butter up the show he's on.
But that reminds me. So I was watching a video the other day on YouTube. The golfer Jason Day. For some reason, so it was like a video where they like tour his house. For some reason, he lives in Columbus, Ohio. I don't know if I was like a multi, like he's probably got like $50 million. I wouldn't be living in Columbus, Ohio.
You know what Columbus is known for?
Ohio State University.
It's
the Ohio State University.
No, it's Test Market USA.
For what?
For anything.
Like
for any new product, it's Test Market USA because the population of Columbus so mimics the population of the United States that any sort of new food product or anything gets tested in Columbus.
Okay. So if I've ever got like a beta of an app to run or whatever, just bring it to Columbus. This is why I learned so much sitting next to this guy.
I went to the Wendy's headquarters once in Columbus.
Oh, okay.
Yeah, as part of like a marketing program, and they kind of explained that, and they like put us through like one of their test groups or whatever.
So you're telling me Wendy's?
I don't lie.
So you're telling me that they brought the spicy nuggets to Columbus before the rest of the country?
Yep.
Yeah, and the new Frosty or whatever before it came out.
Okay, cool. So if you ever want some new things that aren't released yet, go to Columbus. Either way, they were touring Jason Day's house, and he's got like a huge like gym workout room with a putting green or whatever, and a huge flat screen TV. And he's like, yeah, that's where I turn on CNBC every morning and like look at my investments. And the guy made a joke about it, and Jason was like, yeah, they're not doing too well or something. So he probably, I mean, anyone with that much money like probably has a lot of it with a financial guy. My guy. And then the rest of it they might just play with.
Yeah, that's right, Christian. Columbus gets all the good stuff. Even their college football is better down there. Oh, don't tell Joel I said that.
But yeah, that was another funny joke I saw. They were like, how come like adult, or maybe they said like middle-aged males always have like guys for everything. You'll be like, hey, Dad, I need to go get a new tie. And they'll be like, oh, you got to go to my tie guy.
I don't know. It's a dad thing.
To just have a guy for everything?
Yeah. I think it supersedes race and creed and everything. It's just a dad thing.
That they have guys.
Yeah,
for
dad.
everything.
All dads have guys. You got a guy for your hair. You got a guy for your shoes. You got a guy for your car.
What about if you don't have a guy for something? Do you have a guy?
You gotta find a guy who has a guy.
You got a guy that gets you guys.
No, you just gotta go to your friends and say, hey, do you have a guy? And the guy's like, "I got a guy."
Chances are, we gotta ask Joel. Hey, do you got a guy for?
I asked Joel. I asked him. I said, hey, do you have a guy for your car? And he's like, yeah, yes, I do.
You got a guy for?
And he referred me. No, I don't. Aaron and I are too young to have guys.
Yeah, so we haven't reached that level yet of having. I have one sort of guy, but I can't say what it is. Yeah,
I don't even want to know what he's referring to.
Adam, Day has like a 3-hole thing out in his backyard. Maybe he watched the same video that I do, but it was a pretty cool concept for a YouTube channel. This guy just goes around something like, I don't know because I reach
So it's
out,
like MTV Cribs.
Yeah, I reach out to people and I'm like, hey, you want to come on our show for 15 minutes? This guy's reaching out to people and he's like, hey, can I come into your house with a video camera? But somehow he's getting yeses.
No, Aaron doesn't have a weed guy because weed is legal in Michigan. So I highly doubt Aaron would go to the black market when you can go to any dispensary.
Same thing with Bookie. But might have been what I was talking about.
Yeah, all right, moving on. So we're going to have our next guest on at 1 o'clock today. We're going to be talking, as I said, to Jamie Schmidt, the founder of Schmidt's Naturals and a mentor on the show Going Public. And at 1:30 or so, Jesse Kaylor will hop on and run through some charts and just hang out with us. But in the meantime, I'm open to talking about whatever you want to talk about. I saw, in all seriousness, we did turn green. It seemed like the reason for that rally a few moments ago was
Pete?
more economic sanctions on Russia coming from the White House. I saw that headline. Here, I'll bring up my chart here. I saw the headline that come through right as Pete was hopping on. So that probably was it, but I don't know.
At what point does the Van Eck Russia ETF get interesting to you?
So give me the symbol because there's three Russian ETFs.
RSX, I believe.
RSX, yeah, that's the one that people were talking about. Does it get interesting?
Yeah.
I mean,
it's at like COVID.
No, it's not.
What?
Well, It's at a low from October of 2020.
Well, where did it get down to in the COVID crash? Like 15?
13.
Okay.
13.
That's where it gets interesting to me.
Everything gets interesting at the COVID low.
Yeah, exactly.
No, I don't know. Like I think it's great that there are so many country-specific ETFs out there, but personally, I have no interest in any country-specific ETF, that Russia or otherwise. There's
Well, you used to be into K-Webs.
that. Okay, you got me there. That was
That's what I'm here for.
but that was not just that was a China internet, so it was even more niche. It was a
Yeah.
China internet play.
Yeah, I hear you.
I'm not as interested in like any broad country, whether it, there's ETFs for a bunch of countries in South America, there's ETFs for a bunch of countries in Europe, a bunch of countries in Asia. I have no interest in any of that. I'd just rather buy like some like EFA, EFA, right? Isn't EFA just like the
I don't know.
yeah, EFA is basically like the spy of the world. Just doesn't include the U.S.
So Planet Cyclist is asking, can we explain sanctions? Essentially, sanctions.
no.
Well, I'm going to give you explain like your 5.
Okay.
Sanctions are a way to economically punish a country, right? So you have certain ways to. It's basically
You
the
can make
easiest.
it-
It's basically the easiest way to say, hey, I don't like what you're doing, without actually like intervening with military, with force. It's basically a diplomatic slap on the wrist.
Yeah, exactly. You can make it harder for a country to bank and to trade goods and services.
And I believe the sanctions are
pretty much
placed
it.
on like the Russian bank. Like it's not like the actual. I don't know. There's a lot of specifics. You want to get into the weeds in it.
You're in the wrong place. Sorry,
Yeah.
we don't.
But I do think,
we don't
Spencer,
get that serious here.
and I'll leave this up to the chat as well. But we do this show for essentially 2.5 hours every day. Today will be a little bit longer because I started early. But if we took maybe 10, 15 minutes a show to talk about maybe some non-market related headlines, or really what I'm saying, I'm going to be transparent about this, is I'll search what's hot on like Google Trends, what people are searching for, and then we talk about it in hopes that we get a few more views, because they're breathing down our neck. Our 285 and 85 likes isn't going to cut it. So
it's not great, Bob.
not great, Bob.
So I think that's a very good idea, Aaron. I don't know what is trending today.
Well, I'm just saying, like, instead of making it 2.5 hours of straight market and stock talk, the majority of that stays, but then we
I'm for it.
Maybe some other ways to try to optimize our SEO and whatnot.
I'm for it. Here, let's go on Google Trends right now. Okay. So the top trending item is, that helicopter crash in Utah. That was very sad.
I don't know anything about this yet.
It's because you're ill-informed. There's a winter storm warning? Oh, gosh. No. Where? Oh, it's in... What? It's in Texas?
Energy trade. Last time this happened last year, when everything froze over in Texas, energy went crazy.
I don't think this is to that degree, but there is a winter storm warning in Texas right now. Through
Luke says that's bullish for lesbians.
I know. He says that. I have a hard time. I try to catch myself. If I think I'm gonna say something that is so callous, like that, where like I will make money off of this, I try to stop myself. I think it's a little bit callous. Is he right? Maybe, but
who was it that said?
I try not to do that.
Who was it that said they didn't want to sound like Chamath, but they were like, but who cares about Ukraine? I think it was someone on our show.
Yeah, that was yesterday, I think.
Who was it?
That was oh gosh, we said that on the show yesterday. That was
I was just like,
that was David.
Green?
That was David Green. Yeah.
I was just I thought that was funny because I caught myself from essentially saying like the same exact thing. And I did kind of make that point yesterday, that we're all, as long as you stay in the markets, there are going to be times where there are interventions, there are military interventions going, or there are, geopolitical tensions rising. Does that mean every single time that happens, you need to get out of the market and everything's going to crash? No. you can look at the overall market, the chart over time, and see different conflicts that have happened, and if that conflict had an impact on the market at all. So I don't know. I mean, to me, we'll see. This someone from Morgan Stanley, I did want to pull this up.
Okay.
Said that if we see de-escalation from here, so essentially the things in Russia and Ukraine don't get worse and maybe even de-escalate, he sees an easy 5 to 10% rally in the markets.
JP Morgan also said to buy the dip.
Yeah,
today.
like a bunch of institutional investors have been basically saying that they're not too worried. I've seen some others saying that, like, not the worst case scenario, which is because worst case scenario is obviously like World War III, and I wouldn't be sitting here; I'd be drafted. That's worst case scenario, but essentially, like, outside of that, everything's already pretty much priced in.
Oh wait, just to put a bow on the conversation from before, Pete, we were talking about SoFi and all that stuff, and SoFi right now is 2.8% of my portfolio. Now multiply that by 2 because I've seen my stake get cut in half. So at one point it was around 5%, and now it's less than that. But anyway, it's not going to kill me. SoFi won't at 2.8% of my portfolio, or even at 5% or a little more, not going to kill me. So I am not sweating SoFi. I am underwater, very bad. I maintain my bull thesis. If I'm wrong, then I'm wrong. So be it. But at a certain point, you really have to know the difference between a trade and an investment. You really do. Okay? Not all investments work out. At a certain point, there will come a time where I will have to reassess this trade. But it's not now. I mean, I bought the stock like less than a year ago. I bought it in May. Okay? So in the grand scheme of things, what's that, 9 months? It's not a lot. In the grand scheme of things. I'll at least reassess it when it becomes a quote unquote long-term holding as far as tax purposes, the end of May. But no, I'm not feeling pressure or pain or anything on SoFi because I know why I bought it. I bought it for a long-term thing, and I'm not trying to change my mind. All right, let's do a quick crypto update, and then we can move on to a few other things. All right, I can't make heads or tails of this heat map here because it is green. Yesterday it was straight red. Today it's straight green. I don't even know what to say about it. Oh wait, that's a new one. BCH, is that new? Oh, that's Bitcoin Cash. And FTT. I don't know if I've seen that on here before. Oh yeah, we did. That's FTX. Sorry,
Yeah, we did.
I'm trying to.
CRO's coin.
Yeah, CryptoCoin. Yeah.
Crypto.com.
Okay. So nothing new on the heat map, but hey, green on the screen. That's cool.
What's Dogecoin at? 15 cents?
13 and a quarter.
Oof.
13 and a quarter.
Hey, look, we just had that guy's brother on our stream.
Yes, we did. Anyway, your crypto heat map and your crypto update are brought to you by Voyager. Get $50, $50 sent to you worth of Bitcoin when you sign up for an account using the offer code ZING, Z-I-N-G. You fund it with $100 and you make a trade. They will send you $50 worth of BTC into your account. Check it. Get it. Got it. Good. All right. 12:53. 7 minutes until our next guest. What else was on my list here? I had a few other things on my list to talk about.
I don't know. I've never tried Schmidt's natural deodorant, but I don't know if you've ever tried any natural deodorant. It doesn't really work for me.
No. I don't do a lot of brand experimentation.
Oh, you're pretty loyal to your brands?
In my life. It's not that I'm loyal so much as I'm lazy. And I don't want to put unless I get like a serious recommendation, I don't want to put like the mental energy into like finding a new brand. Like I just stick with Old Spice. I've been using Old Spice for I don't even know how long. Just stick with that. So anyway, something else I wanted to do before we bring Jamie on here is bring on the earnings calendar for the week. We are still in earnings season, as hard as it is to believe. The earnings never seem to end. though I'm okay with that because I love earnings season. So where's my heat map? There it is. Or not my heat map, my earnings calendar. There it is, up on the screen. Looking ahead to tonight, eBay and Booking Holdings are probably your big two tonight. eBay, Booking Holdings. Fubo is interesting. Skills is interesting. L Brands and Victoria's Secret both report. That's a little bit interesting as well. But eBay and Booking are going to be your top two reports of interest tonight. Booking is interesting, and I'm going to pull up the chart because that reopening trade, we talked about that on pre-market prep. It has been hot. It's been a really, really nice trade. It's kind of come off here in the past week or so, but let me get my chart up on the screen.
Have you seen Skills recently?
No. Let's look at that next. But here's Booking. There we go. That was an all-time high last week, right? On the 16th. All-time high in Booking. So it's come off a little bit, but it was a very nice trade overall. And it wasn't just Booking. It was Booking and it was Expedia. So I want to see what they say as far as, how Omicron affected their business at all and what they say about the rest of the year. Are we back to pre-COVID levels? And if not, when do we think we'll get there? eBay is always of interest. It is a eBay is a growth name. I mean, it's not a new company, but for a long time it traded with PayPal because they had the partnership there, and then now they're not with PayPal anymore. They're probably glad they're not with PayPal these days. But eBay gotten punished with the rest of tech here as a beneficiary of the pandemic. So I don't know. We've gone from 80 to 55 in the last 4 months on eBay. Let's see if we can give it a level. That low from March is interesting. That low of 53.45. That's interesting. The bar is low for eBay. At the same time, you kind of have to group them in with every other pandemic play in that they're probably going to show that growth is not growing at the same rate it was during the first 2 years of the pandemic. However, there's the other side of that coin that the consumer is strong and retail sales are strong. Does that translate to eBay? I don't know, but we'll find out. Conference calls today at 5 o'clock. Earnings after the close tonight. And then looking ahead to tomorrow morning, let's get my calendar back on the screen. Alibaba is a big one. AB.
It's my baby.
Yes. Alibaba tomorrow. Moderna tomorrow morning. Wayfair. Oh, gosh. I haven't looked at Wayfair.
You know what? You know the phrase where it's like...
Planet Fitness.
What?
Planet Fitness is tomorrow.
Nice.
And Papa John's. That's a pair trade.
Do you know the phrase? It's like you don't...
know what you've got until it's gone?
Yeah.
Okay.
I listened to no, I was gonna say it's like you don't quit or you don't lose if you don't lose like when you're down, you lose if you quit or like something like that, you know?
I don't know what you're talking about.
All right, something along those lines.
Where are we going with this?
That's how I feel about Baba. I didn't lose. I'm not wrong on Baba. I didn't lose until I quit.
Okay.
Then I'm out. Then I'm wrong on Baba. Spencer, did you see?
So it's only a loss if you sell.
Yeah.
But
it's not even like a market quote. It's like you don't quit when you fall down. You quit, or you don't lose if you fall down. You lose if you stay down, or something like that. You know?
No, Thrifty. Alibaba's CEO was never missing.
I don't know if I'd say that.
Because Jack Ma's not the CEO. So technicality on that one. And he
The
was
chairman.
never missing. He was just out of public eye for a while.
Yeah, sure.
You guys,
Sure.
you conspiracy.
Jack Ma is my favorite CEO of all time. Maybe.
What?
Have you seen his like? Give me another CEO.
Do you have a? I don't have a favorite CEO of all time.
I do.
Jason Rasnick. Boom.
Oh,
Favorite
shit.
CEO of all
Is he
time.
watching?
Nailed it. Is he watching? Probably not.
Then,
I don't know where Jason is.
because I'd be screwed if he heard me say that.
Where in the world is Jason Rasnick? Check his Instagram. Wait, what? Oh, you're talking about for the? Yeah, I saw this.
He literally dressed up as Michael. Wait, no, this isn't even what I was talking about.
Yeah, I know what you're referring to.
Jack Ma guitar.
Yeah, wasn't this like 2 years ago?
Yeah, I'm saying
Yeah.
show me another CEO that's going out there doing this.
Or maybe it was more. I don't know.
Look what a cool guy he is.
My other favorite CEO is Jamie Schmidt, who's coming on next. Founder of Schmidt's Naturals. Boom. What a segue.
All right.
Yeah.
Then let's do it. Let's give her the new special intro.
All right. Let's give her the new special. We got some complaints that the special intro was too loud, so we brought down the levels a little bit.
It's too quiet for me now.
Now it's too quiet. Can't make
We're
anyone
like
happy.
Goldilocks?
Can't make anyone happy.
It's because it's
Oh, Jamie, how we doing here?
Hey, good. Happy to be here.
I'm hearing myself, I think, from your computer.
Uh-oh.
Although now it's gone.
Okay.
Which is okay, cool. Anyway, Jamie Schmidt, welcome to the show. As I mentioned earlier in the hour, you are the founder of Schmidt's Naturals and a mentor on the show Going Public. Let's start with like the background there, because you were pregnant, right? And you created this company in your kitchen, and you thought, yes, deodorants. That's where I need to be right now.
It's true. You know, deodorant wasn't something I was entirely passionate about as a kid. You know, I never imagined myself becoming the queen of deodorant as I became later in life. But really what it was, you know, you're right. I was pregnant. I was looking for healthier options to use on my body, and was very much a DIY person living in Portland, Oregon. Everybody's a creator or maker of some sort. And I was making things, and I thought, why not make my own deodorant, lotions, and soaps and things. Also, I was on a budget, so it made sense to save a few bucks. So with that, you know, I actually realized what I was making was good. It was quality product, and I decided to take it out to farmers markets around town. And the response I was getting from the community was incredible. People wanted more, and so I thought, this is my business. This is my calling.
Now, there's a big difference though between like farmers markets and selling your company for 9 figures to Unilever. Yes. So how do you go from farmers market to that?
Well, it took about 7 years. I think the trick was honestly not having an end goal, never looking too far ahead. I didn't go into this thinking, you know, I'm going to build this business and sell it to Unilever one day. But, you know, one step at a time, and things started to fall into place. You know, my product was different from what was on the market. I like to say that, you know, innovation isn't about creating something entirely new. It's about just putting your own unique spin on something that people already want and need. So that's what I did with Schmidt's. You know, I was innovative with the fragrances I was using, with the formula that I had created, and just the way that I was marketing the product. And also the distribution channels. That was a big, I think, key for Schmidt's scaling, is that we were looking at distribution channels that the competition wanted nothing to do with. So for a natural deodorant, for example, you think, oh, I'm going to find this at Whole Foods or at the farmers markets. But I wanted my product to be found in stores like Walmart, Target, and Costco, where you wouldn't expect the average, you know, natural consumer to be shopping.
Yeah. So tell us what you're working on right now, because aside from Schmidt's Naturals, you've got like your own it's a VC fund or something like that?
Yeah, it's a family office. It's called Kaylor Capital. I started it with my husband and business partner Chris. Just the two of us, no LPs, and we invest primarily in consumer packaged goods, but we've expanded a bit into some Web3 as well.
Ooh, Web3.
Yeah, that's a whole other topic for another day.
That's a whole other topic for another day. Maybe we'll get back to that. But I also want to ask you, because it says there on the screen, obviously you are a mentor on the Going Public show. We've been talking to various mentors and entrepreneurs from that show in the past couple weeks. And I was watching your segment from, I guess it was last week and maybe even the week before now at this point. I can't remember. But and your big thing seemed to be about like kind of what you said, just knowing your customer and then marketing.
Right. Yeah, it's true. I think that was kind of my secret with Schmidt's. Is in the earliest days, I was I brought a sense of, I guess, vulnerability to the business, right? I didn't come into this thinking, this is how I'm going to build the product. These are the customers I'm going to reach, and here's how I'm going to do it. It was more like, let's keep an open mind and let the customers teach me. And that, you know, became more challenging as the business scaled, but it remained a critical component of like who we were as a brand. Yeah.
So I'm just curious, like, has anything surprised you from the companies that you've worked with so far on the show? Because you've working with Proven and NGT and Hammett, I think.
Yeah. What I've appreciated the most is just how open-minded the founders have all been. It's hard to allow somebody to come in and assess your business and tell you how to do things. And I think a big part of that is your approach to mentoring. For me, it's coming in and being collaborative and not saying, here's what you need to change. It's more like, let's think about it this way. But the founders have all just been extremely open-minded and excited and just really, willing to take the feedback, which has been really fun.
Yeah, and I'm showing some clips now from episode 4, which is where you I made your first appearance on the show. Okay, and Thrifty in the chat. What is Web3? Well, it's a whole other can of worms. I don't know. Maybe we'll get there in a second. But I guess, Jamie, like I want to know, like, where is most of your attention spent these days? Is it doing the investing for the family office? Is it on, is it helping other like founders and female founders, grow their business?
All of it really. What motivates me more than anything is just helping other entrepreneurs to take the leap. Whether that's, just getting started with a business idea or figuring out how to scale the business or refreshing their thinking around an existing business concept. That's fun for me. And so that shows up in different ways. Through my investment fund, I do some consulting on the side, of course, the Going Public show. I've also started a new initiative in the crypto space. It's called BFF. The idea there is that we are a platform for welcoming mostly women and some non-binary people into this space that's been heavily dominated by men.
I'm curious, like, since the theme of the show is mentoring companies going public, if you can share a particularly good or a particularly bad piece of advice you got along the way. Bad is preferable.
It's also subjective. I think one thing that I've realized as a founder who people can say is successful, given my path and my exit. I think it's so key to really take every piece of advice with a grain of salt. I think it's important for people who have made it to approach everything with humility and just to understand that like their way is not the only way, but it can still help advise and inform people. And I think the biggest part is storytelling. I think that's the greatest way to teach and for people to learn is just through stories. It's less about a playbook that's scripted. It's more about here's what I learned from this crazy experience and here's where things went wrong and here's how we came out of it.
When you look at a consumer products company, because that's what you've made your area of expertise. What sort of things do you look for that stick out to you as like major green flag or like big red flag, like whether it's the brand or the broader company?
I talked earlier about innovation, right? So when we look at a product or a brand, it's less about like, this is some very new, compelling, innovative idea. It's more, how can we take a concept that's been around for a long time that already has product market fit, but do it a little bit differently and do it in a way that's bringing more accessibility and tapping into consumer groups that may have been overlooked in the past. I go back to the example of building Schmidt's with a natural product that I got into some of the mainstream retailers like Costco and Walmart, where you wouldn't expect to find a natural product created in a kitchen. So brands that are looking at their distribution in a more strategic way are really attractive to me.
How did you do that, by the way? I mean, because you have to find the middleman, and you got to find the shopper, right?
It's having no fear, right, and just approaching retailers and saying, "Here's why you need my product." But it helps, to level up. So I started, of course, with some of the some of the more local retailers, like small mom and pop shops, and then made a case for, why my product was selling well and why the next retailer up the ladder might need to carry it. So when I approached Whole Foods, for example, I could say, hey, I've been selling in these smaller co-ops, and here's my numbers, and here's how we're, selling compared to the competition, and then just continuing to make a case for yourself.
Yeah. And as you said, it was overnight success, 7 years in the making, right?
Yeah.
Yeah. So.
Right. And the first few years were slow intentionally. I did not pursue this as a full-time, commitment really until a couple of years in. I bootstrapped the business, so I didn't have, VC money to lean on, but I also didn't have VCs to answer to, which was a nice, nice way to build a business.
So what was the moment where you thought, okay, I need to actually commit to this thing. This is more than a hobby now.
Yeah, I think it was when I just literally felt, so stretched thin that and was just most passionate about putting my attention into the brand. I had other things going on. I was a new mom. I had a couple of side projects that, were keeping me busy and excited, but not as much as Schmidt's. And I knew if I put my full self into it, that the brand was going somewhere.
And so then I think it was in 2019, I want to say. No, it's 2017 where Unilever approached you. Well, I'm assuming they approached you. I'm assuming you didn't approach them. But how did you decide that was the route to go?
The business was at a point where it needed more than what I could give. We had a very lean team, didn't have much of a C-suite. We were certainly at a point where we were competing with, at a really significant level with some of the heritage brands. And so we needed the support, and we were about to start fundraising. As I mentioned, I hadn't raised any capital, but we were at a turning point where we had to. So taking on a partner like Unilever, of course, solved the capital issue, but also, unlocked some distribution channels, consumer insights, and just things that we never would have access to as a small independent brand.
I'm just curious because I've heard this from other founders, on podcasts that I listen to, that after they sell their company, they felt like a sense of mourning, almost like a sense of loss, because it was no longer, it was their baby, and they just sold their baby. Did you feel that way at all?
Yeah, I can relate to that. There was just an abundance of emotion, really. That of course a little bit of sadness and loss, but also just really pride, for having built something so significant. And then excitement for what the future could hold. I wouldn't be sitting here talking about the Going Public series if I hadn't, been able to have an exit like I did with Unilever. And so it just, it was a turning point in my career and in my life for sure.
Awesome. Jamie Schmidt, founder of Schmidt's Naturals, mentor and Going Public. Jamie, last question here. Give us one trend, one consumer products trend that you are the most bullish on right now.
Okay. Well, I'm gonna have to say the crossover with kind of the Web3 space and consumer. There's just a lot of
elaborate for those who don't know what Web3 is. Explain it like we're four.
Yeah. So basically, we're at this stage where the internet has progressed into being more off-chain, right? And so I'm trying to keep it in simple terms. So let's think about a brand, for example, a consumer products company who might, for example, have the opportunity to create an NFT project. I know there's a lot of mixed opinions right now about NFTs, but I think the opportunity for consumer brands to tap into something like this could really unlock a lot of potential in marketing and acquiring new customers and keeping existing customers happy. I wrote a Twitter thread about it, and I'm happy to share somewhere if it's relevant.
Yeah. All right. I will go find. I know I'm following you. I will go find your Twitter thread and read it after the show today, because the implications of Web3 on all businesses, I think we're still learning it. We still don't really know yet. It's so early. But it feels in a weird way. It feels like the mid 90s, but also people say, well, how did that end? And so whatever. Conversation for another day. Jamie Schmidt, founder of Schmidt's Naturals, mentor on the show Going Public. The links to those are in the description of this video. I'll put them in the chat. They're also on the screen. Jamie, a pleasure to chat with you. Thank you so much for coming on Benzinga Live today.
I enjoyed it. Thank you.
All right. Thank you. All right, it is 1:13 p.m. Eastern Time. Aaron Breeze lost his headphones. What are you doing, man? What is he doing? Are you back with me?
Hey, guys.
What the heck was that? You just lost your headphones.
I did. I got him back, though. That was a good interview. Great job, Spencer.
Wait, real fast. You didn't put the links to... You didn't put any links for Jamie in the description. We got to get that links in the description, man.
Wait, you mean Jesse?
No, for Jamie Schmidt, for Going Public. All right, I'm putting them in the description right now. They should be there.
Oh, I thought you meant links to join the show. Nothing clarifies like clarity.
No, like the links to watch their show and also to learn more about the companies. I'm going to put that in the description right now, so I'm editing that. So... You can all talk amongst yourselves.
Thrifty says we need a thirst trap emoji. I don't know what that entails, but
I also don't know. I also don't know what that means. Speaking of emojis, you guys want an emoji of Aaron and myself? It's very easy to get.
I need to get a better emoji.
Okay. You want an emoji? You want to use an emoji of Aaron or myself? Go to youtube.com/Benzinga. Click that join button. That join button opens you up to our YouTube membership program. $3.99 a month to start. We'll be adding more tiers with more benefits and more perks here shortly. But for the moment, it's just the badges and emojis of Aaron, myself, Mitch, Chris Cathie, Luke, and I think that's it. Maybe? I don't remember.
There's a cat on there too.
There's a cat on there.
And the cat came back the very next day.
What was I going to say before I got distracted? I was going to say, no, I was going to take stock of the market right now because I
think we reversed.
I find that I tend to lose sight of the market on this show.
I think it reversed again.
Because I'm so focused on like the interview or what's up next or what we're talking about that I lose sight. Oh, new low of the day. Well,
see, that's what's been going on in this market. Every single rip, you could, even the one off the open today, you could have sold that. You could have waited till the reversal, sold that rip. Shoot, I'm.
Wait, Maurice, just rewind the stream to like the first 5 minutes.
She asked about Coinbase?
No, she was about Tesla.
Oh.
Rewind the stream to the first 5 minutes. We talked about Tesla already.
Yeah, I was saying I didn't like it. Bearish in the short term.
Gosh. That was a very short-lived rally. New low of the day, new low of the week.
I think.
What's the low of the year? What's the low of the year on the SPY? 420.76. 420. That's appropriate.
I think this is the big guys shaking out, trying to shake out the last or the remaining of the.
Things now start to get really interesting, just from a SPY perspective, right? Because the closer you get to that 420, the closer you get to the low of the year. That's also coincidentally the low of.
DG gave us 422 as his bounce level.
Okay.
So I don't know if he meant like reversal, like we're going out of a bearish market, we're getting into a bullish market, or if he just meant we're at least going to bounce there a little bit. So I'm watching that level 422, 423 on the SPY. If we get down there today, I'm definitely going to look at some
422. If we get down there today, that would be
another percent.
I think that would be pretty dramatic.
It'd be like another. Now
that would be pretty. We got 3 hours left.
So
that would
Spencer,
be pretty dramatic.
We're down $3.30 right now, down 75%. So if we drop down another 0.75%, so then it was 1.5% down to 420. I don't think that'd be that crazy. SPY down 1.5%. Yeah.
Things start to really get interesting when you make a new low of the year, as 420 would mean. So,
I just don't like. Everyone now is bearish, so if everyone's out there buying puts, I'm
bearish in the sense that I don't think the market will close green for the year, but I also don't think like right now we're down 11% on the year, something like that. I don't think we're going to close down 11% on the year. I think we're going to close down less than that in the SPY. I don't know where exactly. I'm not a wizard, but the further we fall here, the more likely the more I look for like a bounce, because that's what happened last time. We just and it took a month. Well, it took 3 weeks to get back to these lows from late January, right? We basically spent the entirety of February higher than we were a month ago. So I'm kind of looking for a bounce again. That's just what I mean. That's what I've said like this entire time. Is I think it's just going to be chop, and more chop. If you can argue that we've been in a sideways market really since like September, right? I know we made a new all-time high at the end of the year. I'm sorry, that was actually that was in January 5th or 4th, but we've really gone nowhere in the last 5 months. So the longer we hang out down here, the more I look for a bounce. And of course, if we were to start falling, if we were to start seriously falling into the teens, right? Well, maybe that changes the conversation a little bit. That'd be pretty dramatic. But this is just the SPY. Let's pull up the Qs. Take a look at that. Oh man. Oh wow. Look at that chart on the Qs. Look at this. So what was the low of the year? It was from January 24th, and it was 334.15. We are making a new low for the NASDAQ since June of last year. Whew.
So here's my thing. Is it's just I refuse to believe anything, especially in the markets, is like easy or that like the idea that like when Dogecoin was going crazy, everyone that was a big Dogecoin backer was just like, oh, buy Dogecoin, we're all gonna get rich. Like,
Yeah.
I never bought into that because it's like, oh, you really think like we're all just gonna buy this speculative asset and we're literally all gonna get? That's not how it works. And right now, I feel like everyone is setting up for a full. So right now we've had a pretty hefty correction. I don't know, everyone's looking for like a full crash, buying puts, whatever. I just don't think it's that easy. I don't think it's that easy to look at this chart and say, oh yeah, we're going to keep going down, so I'm going to keep buying puts. I'm not, obviously that's possible. I can't say the other way it's going to work. Oh, we're just going to buy calls and we're all going to get rich. No, I don't know what's going to happen from here. Could I see us, like you said, just chopping up and down, kind of staying right here? Yeah. But I don't know. I'm not buying all this doom and gloom out there.
That's fair.
I'm just not worried about it. I don't think a lot. Maybe it's just the big guys saying they're not worried about it, but all the big banks, institutional investors, they're out there buying dips.
I will say I always kind of wondered what would happen to the market if the mega cap tech stocks were to do nothing for a period of time.
Oh yeah,
right.
Yeah, like last year we had
and this sort of answers that, because I knew that to some extent the market is tied to those FANG stocks because they make up so much of the indexes. But I wondered if like the rest of the indexes would compensate, like if the money would flow from mega cap to like small cap or to mid cap, and it hasn't.
Last year we saw SPY up. I want to say, what was it, like 18% on the year or something? I don't remember the exact percent, but it was like all driven by the big names, all driven by Apple, Microsoft, Netflix, whomever. Andrew in the chat is asking, what's the positive catalyst? Here's the thing.
I have an answer, but I want to hear what your answer is.
My answer was you don't need one. I mean, look at the SPY all-time chart, the stock market all-time chart. What do stocks do over time? It goes up. You don't need a positive catalyst. All you need is just the economy running as normal. Stocks will go up. I think, but if you're looking for specific positive catalysts, some that we can get in the next couple months would be just improved economic data. Maybe the Fed says, oh, our economy is recovering really well from the Omicron fears. We're actually increasing our GDP prediction, all these different things. Going out of any type of COVID restrictions, business going back, supply chains easing. There's a ton of different...
Can I give you another one that you haven't said yet?
Sure.
The Fed
holding off.
What if the Fed says in March, we're going to raise rates a quarter point and we will reassess how the market reacts to that? And what if they downplay more rate hikes?
Or what if the Fed said, hey, we're slowing down our asset purchasing, but this dip looks tasty. We might get in here and buy the dip.
No, that's not how it works. No. But they would say they could say, or they could try to throw water on the idea of 4, 5, 6 quarter point rate hikes. One rate hike is all but certain, but it hasn't even happened yet.
My main point was if you take away, I don't even think you need huge positive catalysts. You just need the absence of negative catalysts, and the stock market tends to go up over time. But we shall see.
The problem is it just did, though. It just did. So you are due for a correction, and we've gotten it. But we just had the best year and a half that anybody can ever remember. Like, seriously, March of 2020 to January of this year. And I get it, not for everyone, not for ARK, right? Not for high growth stocks, but like in the indexes, it was ridiculous. It was so easy. So yeah, are we due for a correction? Just like the mega, just like the the ARC names and the Pelotons have come back down to earth, come back to where they started, or in some cases lower, do the indexes have to do the same? They can, certainly. They can go back to where they started. This whole thing started in the SPY in the 330s, right? That's where this whole thing started.
And just to give some people some context on this correction we're in right now versus that crash induced by COVID, because I know some people may not have been in the markets back then, but are in the markets now. So this drawdown that we've had is about 10, 11% on the SPY from its highs in early January. So a 10% drawdown over a month and a half.
Still a drawdown.
Call it six weeks.
Yep.
The COVID crash was a 30% drop in
3 weeks.
2 weeks,
3
weeks. So about half the time, 3 times the amount dropped percentage-wise in half the time. I mean, it was terrible. I mean, for people that were just buy and holders, it was a terrible time.
It was violent. It was violent. It was if you were not scared, and people were scared for their health, but putting that aside, if you were not scared for the future of your portfolio in March of 2020, you don't have a pulse. It was terrifying. I've told this story before, but I have a family friend who retired from teaching in January 2020. Can you imagine retiring and then 2 months later you lose a quarter of your portfolio?
Yeah, I was working at, well, I can't imagine that, but I was working at a golf course at the time, and all these guys that are like retirees are like, just
they're shitting their pants.
They're
shitting their pants.
And then it was bad.
Anyway, the Russell obviously looks disgusting. It's been that way. Nothing's really changed on the small cap front. Whoa.
What we got going on? We got the roadmap after the show today.
Yeah. Gosh. Wow. So the Russell started 2021 at 196. And we're at 195 right now. Gosh. Yeah, I don't know. Guys, I don't know. It's a stock picker's market, but you got to look away from the indexes and you got to look away from tech. Well, actually, no. If you want to buy the dip, you can go tech. But like, what's been strong? Oil and staples and utilities. That's where the strength is. Does it stay that way? I don't know. But like, look at Coke, all-time high. Look at Kraft Heinz. It's been ripping. It's Kraft Heinz. It's been ripping. I don't know. Yeah, maybe I should quantum. Okay. Speaking of the roadmap, that's our NFT show that airs every Tuesday, Wednesday, Thursday. If you guys missed our list maker show today, we did a special 2-hour show devoted to NFTs. It was the show before this one. Check it out, youtube.com/Benzinga. Wait, what is MOS? Should I know that? A mosaic? Guys, I still keep an eye on the MSOS. I own a bunch I don't own this, but I own 4 of the stocks, 4 of the largest holdings in this fund. Same thing with SoFi. I really don't look at it, but man, it's not fun, okay? And same thing with like I saw on Overstock last night, right? Is Overstock had actually I want to talk to you about Overstock for a second, Aaron. This annoyed me this morning. Okay, check this out. This is what Overstock did. So there's 3 different news events on Overstock, all coming from the company. Okay? We have a press release out at 5 p.m. yesterday. Okay? That the parent company of the New York Stock Exchange has invested in T0, which is Overstock's blockchain exchange.
Yep.
Okay. That's at 5 o'clock yesterday. This morning, 6 a.m., earnings. Okay. Nothing crazy about that.
No.
Fast forward 2 hours, their conference call starts at 8:30, but at the same time that the conference call starts, they drop another press release saying that they've successfully launched their clearance and settlement functionality for securities transactions for T0. T0 is an alternative trading service or alternative trading system. Why couldn't they have just said that yesterday or in the earnings release?
I have no clue.
I mean, it pumped the stock, so I guess it did its job. But like, that should piss you off. I feel like as a trade, I don't know, as a trader, and not that they don't care about traders, but like, and if you're an investor, you're in this for the long term anyway. But like, give me the information, give it to me all at once. Let me decide what's important. Let the market decide what's important. Don't like drip. What's it called? Like slow. Like, don't slow play your own news. Put it out there.
I agree with that.
Anyway, Overstock. A lot of people are happy today, but look, they've had a rough year and a half too. Overstock went from over $100 in November to and it was in the 30s yesterday. We say it all the time, investing is hard. Really, really hard. This is a good question. Can we get a guest that can explain how to build an algorithm?
Ooh.
We could
like a trading algorithm or just any type of algorithm?
Yeah, I'm assuming he means a trading algorithm. We could get a guest that can show you how to build some stuff in Thinkorswim or TradeStation. But algorithmic trading is I mean, it again, you have to know to. It's an interesting question. We've never had someone on the show explain how to do that. I have to think about how we could do that without being super, like, boring. No offense. Ophir knows how? Man, we haven't had Ophir on the show ever. Ophir Gottlieb.
Oh, yeah. Actually, he gave me a cell phone number the other day.
Oh, really?
Yeah.
I like Ophir. He's really good at what he does.
Yeah, I forget what it was.
All right, Jonathan, don't do that though. Don't buy some person's algorithm for $10,000. If it was so good, why would they sell it to you?
Listen to this tweet. My wallet was compromised. I'm devastated. Someone took my ETH and slowly, over the past 6 months, traded it all little by little for all these worthless NFTs. Can devs please do something?
That's funny. Was that over here?
No.
Oh. Yeah. You got to look in the mirror. I assume that was the joke, right?
Yeah.
Okay.
That they slowly used all their ETH buying worthless NFTs.
Hey, man.
But there has been. I'm so torn over this because, like, Twitter is so. I mean, there's a lot of things that are polarizing right now. I don't really know how NFTs has become one of those things, but my Twitter is, like, half full of people who literally will, like, quote retweet someone who's, like, mad about losing a bunch of their money in NFTs.
Yeah.
And, like, laugh at them and be like, haha, like, you're so stupid. You bought a JPEG that I can click right and download. And then, like, half of my Twitter is, like, people, like, talking about how great these different NFT projects are. I feel really bad for people that have, like, bought projects, you know, and lost their, like, hard-earned money on them. At the same time, if you're out there trying to sell me something saying this is, you know, the future of art or whatever, then I don't know. Like, I feel like I don't really have loyalty to one side or the other. Like, I'm honestly just not big into NFT. I don't have any NFTs. I never have. I probably at this point never will. I feel like I've missed the trick. Well, I shouldn't say that. I shouldn't say I'll never have an NFT because I have no clue. But yeah, I mean, it's sad that there are people that have gotten, like, cleaned out of their savings, just trying to.
I think one of the challenges is, unlike stocks, there really is no roadmap for how to value a cryptocurrency or an NFT project, right? Like, what gives it value?
Well, I think in that sense, and it's kind of similar with stocks. If you think you found something that is going to become, you know, like the apple of everyone's eye, right? If you saw, like, Bored Apes really early on, and for some reason you thought this is going to be something that everyone's going to flock to, but I think there are a lot of NFT projects that you could look at and think that, and then it doesn't end up happening.
Right, but there is no agreed upon consensus for how to value this stuff because it's so early.
Well, I would argue that I mean there wasn't really a lot of consensus on how to value at least certain stocks. I mean, look at AMC and GameStop, right? There was no fundamental. There were really no reasons for
those are the exceptions to the rule.
Tesla.
I think. Again, exception to the rule. But until we can get that consensus out there of like how to value these things, then the same thing is going to always happen. So I don't.
Well, my prediction is that the NFT projects that survive or that thrive are the ones that do tie some sort of real life utility to the project. I think the outside of like the Bored Ape Yacht Clubs are the ones that have become so big that they are kind of commodities. The NFT projects where say like a band puts them out, then you get like special backstage pass. You know, like that's kind of cool.
That's what we're talking about with oh my gosh. The guy he was just on the Listmaker show. Oh my gosh. Good Charlotte. Oh my god. I'm having a freaking Joel Madden. Wow. Joel Madden was just on our Listmaker show this morning talking about these.
But so here's the thing is that's why that's where I think and the NFTs will do well when they have real world utilities. But if you're a band that's going to sell an NFT that also acts as a backstage pet, I mean, why not just sell the backstage pet? You know, I just don't.
Yeah, and the other side of that is like there's no regulation and there's no protection.
Yeah, so someone could hack. I could steal your, whatever, and then. Is that what you're saying?
And Joel was making the point this morning, like if you go to my concert and you buy a shirt, you're going to get that shirt. Or if you buy a ticket, you're getting that ticket or you're getting your money back, right? There is no such protections for NFTs right now.
Right now, yeah.
Right. So.
And I do think there is some cool, like the Cavaliers just dropped a cool project where the NFTs actually.
There are so many cool, potentially cool partnerships with sports, with music, with movies. There is so much cool stuff you do with NFTs. But we're in the top of the first inning here, so I don't know. Yeah, I watched the Beanie Baby documentary, Beanie Mania. It was great. It's fantastic.
On HBO?
On HBO. By the way, I haven't watched the Carl Icahn documentary yet, but I had a dream about it. Isn't that weird?
That is weird.
I had a dream about the documentary last night, but I haven't seen it. I don't know. It was like Carl Icahn was in my dream last night. It's very strange.
That's scary.
Yeah. Anyway, we're going to have Jesse Kaylor on from Elite Trading, I hope, in a few minutes. If not, we're just sort of hanging out, shooting the shit, doing what we do. Don't make me look at the SPY again, whoever just said that in the chat. We just made a new low of the day. All right, whatever. Call me when we're at 420. Okay?
No, 422 because I want to buy some down there. That's our bounce.
422 is just David's moving average, or pivot point, whatever he uses.
Yeah. Wait, we're not at new lows of the day.
We were just a moment ago.
What are you talking about?
Whatever. You guys have any stocks you want us to talk about? I haven't looked at DraftKings for a while. I have a hunch where it is. Oh my god, $20, $20. Yo. Oh, it's gonna fill that gap. Okay. Oh,
it's up $9.
Trade here, Aaron. A trade to fill that gap, that earnings gap.
What gap?
That gap from the 17th. What was the low? 20. Oh, it's $1 away.
So it's going to 21. You're saying?
Yeah, 22 is what I'm saying.
So you're saying I should buy some short-dated calls? Okay, let's go ahead and try this theory out.
DraftKings filled the gap trade. How do we feel about this? SFT for a lotto. What the hell is SFT?
All right, I'm filled.
What the hell is SFT? What, already?
Yep.
Holy crap. Expiring on Friday?
Yep.
Whoa, boy. $22? 23?
I got $21 calls.
$21 calls?
Yep.
Okay. They probably weren't very expensive.
No, they were not.
All right. We got ourselves a trade, and you know what I'm gonna do right now is I'm gonna do that Palantir trade right now.
So remind us again what the trade was for some folks who may have just joined us.
The
and myself who forgot.
Palantir trade was we're basically catching a knife here, / buying the dip / calling a bottom, and we're gonna put the Palantir trade on now, and we're gonna set our stop. I'm gonna give myself some breathing room. I could set my stop at yesterday's low, which is 10.30. That's only 30 cents away. What I'm actually gonna do is I'm gonna set my stop at what I said the all-time low was 8.90, I think. The all-time low was $8. So let's do. Oh, it was 920. 920? 918. All right. So we're going to buy Palantir, and then we're going to immediately throw a stop loss order out at, or I could do a soft stop and just doing a price alert. Nah, fuck no, definitely not. Doing a hard stop, and I'll put it at like 920. So we're going to place an order to buy Palantir right now. I'm not necessarily interested in getting the best price at this second, so I'm going to just go ahead and place a market order. I'm going to buy 10 shares of Palantir, and that has been purchased. Now, to go in, and I'm going to place, and I'm on a Webull, and I'm on my phone, which is not great, but whatever. I'm going to place a stop loss order at what I say 920. I think I said 920.
That's your stop?
Yeah. A buck and a half away.
Okay.
9. Oh, I could have bought leaps. Too late. The ghost. 920 is my stop loss. Good till canceled. And we are set. Still not good at using the Webull app. Okay. There we go. So I'm in Palantir from right now. Stop loss at 920. That's that.
You want to know my bold prediction for the day, Spencer?
Yeah, sure.
I think the Q's finish green.
The Q's finish green?
Yeah. What are the Vegas odds on that? 1 to 100 to 1?
Wow.
Probably 10 to 1.
You think we're going to go up $4, 4 points in the next 2 hours, 2 hours and 20 minutes, 18 minutes?
Yeah, I don't know. And when you put it that way, it sounds tough.
I
But
mean,
someone else was calling for a rally in the chat. I liked whoever that was. Glass half full kind of guy.
I would take the other side of that bet.
All right, well, how about this then? Higher or lower than the current point? 33, or we'll call it $334.
I'll say higher.
Well, that's no fun.
Yeah, Patrick, I'm kind of taking the other side of that coin, though. I'm saying Cathie is causing some selling pressure, right? Maybe the pressure abates. I don't know.
I might. Well, actually, I've already got a YOLO out there now with the draft. Although it was a very small trade for me. I kind of just want to YOLO some like TQQ calls. Like everyone's so bearish that I guess I'm going against trend there, but trend is your friend. I don't know. All right. Bottom line, who knows with this market? This market has no. I mean, it does know what it wants to do. It wants to go down. Like we said, every rip you can sell. This morning, Qs opened up like 1%. Sell that rip. Then they bounced. Sell that rip. now they might bounce again. Are we going to sell that rip? That'd be the smart thing to do, right?
Buying rips, selling dips has worked since the summer, basically, to some extent.
Yeah. This market has not been fun to be long in the past month or so.
No, which is why it's good to get short exposure via shorting or inverse ETFs or options. And this will lead me to plug the fact that tomorrow on Benzinga Live, we are doing our weekly short selling segment with Trade Zero, but we're going to do short selling trivia on tomorrow's show. Just like we do every week. Well, we didn't do trivia last week, but we're doing trivia tomorrow with the Trade Zero guys, all about short selling. We're going to give away some swag, and Trade Zero will also give away something of value. Oh, does he? Yeah, I really try not to keep up with like what other people, because I try not to follow other people, right? I try to just like, if I'm going to buy something, it's because I want to buy it. Not because...
and I love Tom Nash. And out of all those, we've had Tom Nash on the show before. Pat,
Yeah.
I'll reach out to him. Out of like all like the financial stock influencers you can go to, Tom Nash is top tier, one of the best. But I will say, anytime you're like that deep into a position, and this isn't just with stocks, this is with anything. You become I kind of subconsciously biased.
Yep.
Right? If you're so bullish, say Tesla, everything you read is going to reaffirm that position on why you're bullish Tesla, and why all the bears are wrong. So I think it's important, and again, like I said, this goes for everything, not just stocks. I think it's important to kind of try to play devil's advocate by yourself or with yourself. Say like, okay, well, what if I'm wrong? Let me hear out this bear case. Does that hold any credence? And be okay with kind of reassessing some of your positions, because I've had times where I've been way bullish a stock, and then I don't like it anymore, and here's why. And it's okay to change your mind.
Yes, never get married to a position. Whoa, bot in the chat. Get out of here, bot.
We kind of need the bot in the chat. Our viewers are low. We need more bots in the chat.
Yeah, well, I mean, today's is not a great day for. We were light on the guest front today, so we're just sort of hanging out, and then we'll hop off at 2:00 when the roadmap ends. But is Jesse coming on here? Does he have a?
The links are on the calendar invite. I don't see him. I could text him.
Did you? Can you text him?
Yeah.
For me, thank you. While I look up how I'm doing on my dumb Palantir trade. Okay, good. Just checking. Okay. Sorry. What other stocks did you all want to talk about? I asked, and then I kind of
I had one more thing I wanted to talk about.
Oh, AT&T. We talked AT&T. Yeah.
That wasn't what I wanted to talk about.
Okay, what's up?
Spotify. Did you see the big Spotify news today?
No, I didn't. I have no idea what you're talking about.
All right, let me show you.
And then we'll do AT&T after.
This to me, I mean, is just I don't get it. I don't know how you can have what's Spotify's market cap? 10 bill?
28.
28 bill. I don't know how you can have a $28 billion company, and this is the best you can do. Spotify's car thing.
That's what it's called?
That's what it's called. The car thing goes on sale for $90.
What does the car thing do?
It's like a little screen that allows you to click next on your. I mean, I really don't understand it. Right? You're playing Spotify off your cell phone. Why do you need a different screen to click next on the song? Spotify's car thing, the dashboard accessory that controls Spotify on your phone, is now widely available to buy in the U.S. I mean, is it for people whose cars don't have a way for you that you click next on the song? I really don't understand. I'm not trying to be like facetious here, like making fun of Spotify. I just really, really do not understand the utility of this, considering to play Spotify in your car, you already are going to have your phone, which this is like the same thing, right?
Sounds like it. It sounds like I'm not sure why I need it, but then again, I don't.
$89.99 gets you the car thing itself, which also, like, I don't know if they're trying to be funny, but calling it the car thing, it's just like, you're a $1 billion company. You should be able to do a little bit better.
I don't know. They're trying to be glib. Whatever.
Spotify says it found people with car thing listen to the service more while in their cars. Okay. So maybe that's what it is. Maybe they just want it in people's cars because then the people are going to feel more.
It's funny you mentioned this product today, because just the other day, this is last week.
Oh, wait. Sorry, I'm going to let you finish. I didn't read this part, but my colleague Ashley Carbon tried the device out last year. She found it wasn't a great deal better than her existing solution of having her phone mounted on the dash. That's because it's the same exact thing.
People said that about the iPad. Well, it's the same exact thing as a phone, just bigger. What do I need an iPad for?
But what were you going to say before I interrupted?
No. So I was going to say, oh, wait, I brought AT&T up. I haven't heard much about the great battle for the dashboard. You guys remember a few years ago that was a thing. There was one screen and only one screen that people cannot look away from. They're glued to it. They're trapped, and that screen is the dashboard. We can put away our phones. We can put away our computers. We can turn off the TV. We cannot turn off the dashboard in the car. It is on, and we are married to it. And there is this whole big thing about the companies that are angling to control the dashboard of the future. Whether it was like Spotify and Apple Music and Pandora when that was a thing. All these companies that were investing in owning the dashboard because it was the one screen that you can't turn off. And I haven't heard much about that for a while.
Well, it's interesting because I don't know. I might be wrong because I'm not the biggest car guy in the world, but I'm pretty sure like every single new model of car coming out over the past 2 years like has Apple Play built into it, or the
there we go. Maybe Apple One.
Right, or has the equivalent of Apple Play, but for Google, like they have both options. And if you have,
that's a great point, Greg Way. I don't know how to say that.
But
yes.
Yeah. What was BlackBerry trying to do with their car?
Well, there's still.
It's because like in cars, the Bluetooth is run by BlackBerry a lot of the time. If you say to your car, "Hey, call Spencer," it's BlackBerry using that, or BlackBerry's powering that technology. But if you already have Apple Play, there's just no point for the Spotify. MDK actually brings up the first like real use case to me for that Spotify thing. Is might be good for letting your because I don't know, like I'll let my passengers just on my phone, but maybe some people don't want to hand their phone over to a passenger in their car so they can, maybe for Ubers or something. I don't know.
All right, I got talked into buying BlackBerry in like January of last year. Like it was like 13 months ago, before the short squeeze. Right? Yeah, I got talked into buying BlackBerry or it was like here. And I sold it, I don't know, halfway up. I think I sold it like 13. I think I bought it at 7 and sold it at 13 in like a week. It was ridiculous. And I sold it because it got short squeezed. And the thesis remains convincing, but I mean the stock is a dog.
BlackBerry?
So, yeah.
What is BlackBerry trying to do? They were like a 5G play somehow.
No, they're trying to control the technology in your car. That's what it is. That's what they're doing.
Okay.
Okay, wait. So there was a question about AT&T, and so here's the thing with AT&T. So whoever asked, I think it was Thrifty, am I getting free shares? No, nothing in life is free. You're not getting free shares. What's going to happen, Thrifty, is AT&T is doing the spin-off, right? They're spinning off Warner Media, which is a unit of their business. And then that Warner Media is then merging with Discovery to create a new company. So if you are an AT&T shareholder, you are going to get that new company. What's going to happen is the AT&T stock is going to drop by the value of the spinoff, right? So if AT&T here, let's just say, let's not just say it, we can see it. AT&T is a $170 billion company. let's just pretend hypothetically Warner Media is 10% of their business, then theoretically the market cap should fall by 10%. So 17% on the market cap and 10% on the stock, which is $2.3. And then you would then get the value of that drop in whatever you had in AT&T. You're going to get the equivalent in the new company. So there's a spin-off ratio, right? And this is all public. It's in. Maybe we can find it in the filing on the press release here. Here, let's go to the news feed. Let's go to Benzinga Pro news feed. Let's go search for AT&T, and we're going to search for M&A headlines. Let's see if we can find any
Spencer, I just had an idea.
Any details about this merger. So it's a spin-off. So okay, AT&T is going to receive a cash infusion. Shareholders will receive as an AT&T shareholder, you will own a majority of a stake in this new company compared to the Discovery shareholders. Is there a ratio here? I don't see a ratio in this article. Basically, the value of your AT&T is going to decline, and
4-1,
and you're going to 4-1. Is that someone says? Then you're going to get that equivalent value worth of the new company's stock. That's what it comes down to. I hope I explained that well. I don't know if I did. 4-1. Wait, that doesn't make sense. It doesn't make sense.
That's what someone in the chat said. Sorry, Juan saying producer AB and Spencer, my call options on Valet have been tanking. I added 3 more call options. Strike 30. I mean, Valet's been so hot. It's been literally the best performing stock like this year.
Wait, is he talking about Valet, the mining company, or Vale,
I think the energy company?
Well, please clarify, Juan. He's probably talking about Valet, the miner, the miner, not Vale, the skiing.
No, yeah, he's not. No, that's spelled. Yeah, Vail Resorts is VAIL.
My bad. My bad. Okay, you win.
Vail, yeah.
I don't know where Jesse is. I'll have to text him. I
texted him. He said the link didn't work for some reason, but he said he'd just hop on with us tomorrow or Friday.
All right.
We only got a few minutes anyway. But
cool.
Here's my idea, Spencer.
Yeah.
We should create 2 portfolios or watch lists and have them be like the same exact, say like 10 stocks, but they're just competitors, right? So in mine, I have FedEx, you have UPS. In yours, you have Verizon, I have AT&T. In mine, I have Coke, you have Pepsi. And we see, like, does it matter being in the same industry? You know, because, like, hypothetically, the stocks should move together. They're in the same industries. Does it matter? Or, like, how big of a difference does it matter picking the winners in the industry or just having kind of the right industry?
I see what you're saying. So, like, create a model portfolio where
with competitors. So our model portfolios are 100% different. They're all different stocks, but they're exact competitors. So, you know, AT&T and Verizon,
all right,
FedEx, UPS, Lowe's, Home Depot. All
right, can we set this up? Can we let's make a paper account somewhere.
And then we'll have a draft. So we'll put the 20 names out there. We'll do 10 stocks, 20 competitors, and we'll have a draft where you get a pick, then I get the other one that's paired with it. I get a pick, you get the other one that's paired with it.
All right. Okay. Let's do this on a paper account. You want to do it on like Webull or Robinhood or something?
Robinhood doesn't have paper trading.
Oh, then not. All right. Let's find a place that has paper.
I think Interactive Brokers honestly might be the easiest place to paper trade.
Okay, I don't have an IB account. I can make one.
It's pretty. Well, actually, I don't know if it is easy. Maybe it's easy to make a paper account on there.
Be quiet, Siri. All right, that's a good idea. Maybe let's do that next week.
Okay.
Okay, and
we'll do it. Oh, we should do the draft live on the show.
Yeah.
We'll create the portfolios and then we'll just keep an eye on it.
Yeah.
Yeah, AMD versus Nvidia. That's a good one.
So what we're gonna do is we're gonna provide a list. We're gonna say, hey, 10 industries, 5 stocks per industry. Pick one in each.
Wait, Hold on. Say that again.
10 different industries or sectors.
Uh-huh.
We're going to put 5 stocks in each one.
Oh, so now there's 5 competitors?
Well, but we're going to pick one, though.
See, the only thing is I want them to be like direct, because there are some companies that like, I don't know if they're exact. I'm trying to think, like an example. Okay, like AT&T and Verizon, you could argue like, oh, AT&T's got Warner Bros. Or they've got all these.
Well, not anymore.
Well, not anymore, right. But I'm saying things like that, where like a company has a different part of the company to where it's not an exact competitor.
Yeah.
I guess no company's going to be an exact.
Well, yeah, because Pepsi is way more diversified than
right.
Coke.
That when I said that like popped in my head. Like Pepsi, you've got Frito-Lay. You've got.
Yeah. All right.
Ford versus Chevy. See, that's a good one.
Chevy's not public. All right, we got to wrap though.
It was a good idea. Vic.
We have come to the end of our show. That's a good idea, Christian. We should just do it that way. The roadmap is coming up live right now. Talking NFTs. We got to run. I've been on stream all day and I'm tired. So smash that like button. Thanks for hanging out with us, guys. I hope you had fun these last couple hours or so. We'll catch you guys later. Everyone, have a good rest of your day and stay green out there.